only supposed to be watching.
Okay, okay, yeah, because I was reading. You were like, I
And
thought there was.
I'm trying to drive, so I kind of mess with it.
Yeah, 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 yeah. I know. I thought you were looking for like. Cause you're like, I thought there was written rules for trading. So I was thinking like, okay, are you asking because we use the Elliott waves as just a example of why you have to take profits and what most people are doing. We use the
Right.
Fibonacci's to explain where targets can be or support can be and why you see bounces, right? So I thought you
Right.
were kind of like looking for more information on, the amount of the amount of how much like what normal people are doing.
Oh, yeah, no, I'm not normal. I'm
Oh,
definitely screwed up the head.
yeah, no, no, no. That's what I was like seeing there, going, okay, so yeah, because you were asking like, where can we find the rules of trading, right? So I was like, all right, so what rules are we looking for? Yeah, because I mean that's where, so that's where the first thing we have to understand is that we're trading with the masses, right?
Right.
So the masses
Yeah,
are,
momentum and all that stuff.
yeah,
Yes, I
yeah, they're
understand that.
always going to be the retail investors, right? And this is 90% of investors lose 50% of the time there, and they're not profitable. And you have to trade with that them in there. So that's why the rule that we have, the Elliott waves. It's not a rule. It's just the Elliott waves are just to understand when to take profits. Wave one, wave two, to
Right.
expect certain things to happen. Fibonacci's are just to expect buys and sells in certain areas. So
Right.
you're talking about the rules, kind of like the 30 minute.
Yeah, it's like the 30-minute rule, and then like a set of rules for like the 1 hour or 2 hour. When the 2 hour crosses, to take that, and then the one for like the 4 hour when it crosses the 20 line that we take. I mean, they're good rules. It's just I think I'm still looking at the wrong time frames for when like when the bottoms come in, or trying to find the reversals,
Well,
or
yeah,
maybe I'm just jumping up too early. I don't know.
you might because okay, so the reason why, right, and that's why I was saying we're making new videos based on the students that are in the Making Trading Easy, because you have guys like Gus and other guys that come in that are like from the Trading Academy, right? And the Trading
Right.
Academy had a lot more trades and there were a lot more things. So when they come in, they'll talk a little bit about things, and sometimes it's a they'll mention things that aren't there. There's just more complex trading. The MTE, the Making Trading Easy site, really comes down to the ability to just take everything from the academy and then
Right.
turn it into a very simple system, right? That's why you're seeing me I'm adjusting right now to you guys. So like how we had the 1 hour. Yeah, so when we started off, the you have a 4 hour master trade, right?
Right.
And explaining we wait for the 4 hour RSI to break the 20 line. We're trading with the momentum of the people, right? That's a very simple way to trade with the market, right? But after, because everything comes down to execution, right? Every systematic trade has to be done to where we can get the same results. And at least, so when you watch that video on did you see the video on the worst trader?
Yes.
Okay,
Like I
breaking.
said, and I gotta watch them 2 or 3 times because sometimes I comprehend them, sometimes I don't. But I mean the ones with the moons where you're grabbing it from you're letting it go up and then blue moon and then go back down a green moon
Mhm.
for it to get better momentum. Yeah, I mean I understand that 100%.
Yeah,
It's
no,
just it's when we're changing from we're watching a 30-minute time frame, and then we're going back to a 5 minute time frame to look for. Then we're going back to the 15-minute time frame to change the trade with that momentum, and then we're still looking at the 1 hour time frame so we can trade with momentum,
yeah,
not trade
that's
against the 1 hour or the 15 hour a minute time
yeah,
frames now.
and that's kind of where I was like. you know, after, because there's steps to every trade, right? So what I do is after I evaluate every trade, I got to evaluate the system and say, okay, what steps can we remove here? Because it has to be something that's really simple, right? And that's why the 30-minute rule came in, and it said, you know what, you know, besides the 15-minute RSI rule, which you'll hear Gus talk about, and all these things, the reality is that in order to have a long trade, we just need our 30-minute moon indicator to break above the positive line, right? At the end of the day, if it's above the positive line, it's the strongest long possibility at that time, no matter what we're looking at. So it's, yeah. You hear me?
Hello.
Hello?
You there?
Yeah. Can you hear me?
Yeah, I'm almost to junction, so it's gonna be kind of in and out.
Yeah. What I'm going to do is I'm going to go back and I'm going to, now that I know what you're saying, I'm going to explain what moving from the 30 and how to use the 15 and the 5. Because all that really is kind of like a snowball. When something's, you know, that's why we say when we expect something to happen, right? When we're looking for a long trade, right? And it, right, we know it's going to happen. And the only reason we go from the 30 down to the 15 and the 5 is to see the momentum of what's happening, right? So if we know we're supposed to be getting volume and the 5-minute is starting to get weak, well, then we know we're not going to get our 30-minute rule done, right? So if the 5 minutes getting weak and then it's moving to the 15, that just gives us the ability to say, hey, we're not getting there on the 30, so I need to reverse my thinking early and figure out where to get in here. And that's where you start jumping the every little Fibonacci bounce. You take advantage of getting into those shorts in those time periods, right? So what I'll do is, now that I know what you're saying, is I'll make another video explaining why we start moving down, just to give us an idea of what the future holds. Because based on the 30, we know what we're supposed to have. If we don't get it, then we know, like, okay, we need to reverse here. Okay. Yeah. So I'll make that video for you, because I got a couple more videos here.
Yeah, because I'll start, like the 45-minute or whatever, if I'm waiting for the hour to go up and hit, pull back and go up. That takes everything 3 or 4 hours for everything to do everything. But I'll end up, or even looking at 15 minutes, I'll go back to 1 minute and wait to watch the orange line move up, start watching the green moon. Then I'll move up to my 2-minute, wait to see the green moon. Then my 3-minute. And I just keep walking the charts usually, just watch the green moon. And that's sometimes where I take some of my entries, and sometimes it don't make it all the way to the 10-minute, you know.
Well, yeah, that's why, like, you got to have the rule in place where, you know, the only way you can jump a 30-minute rule is to have the 15. That's why we say, you know, and that's why in the time frame video we talk about that you can't go lower than a 10 and 15-minute time frame, because at least in those time frames you can get a C trade that'll at least give you a 1%. But you got to know that if you're trading a 10-minute and a 15-minute, you're not going to get the results of a 30, right? So you have to be very, like, high leverage, get your 30 to 40% and move on, right? Yeah. It becomes a very, like, and you have to teach yourself that when you're in a 10-minute and 15-minute, you know, long trade that you're trying to jump early, that it's never going to hold its position. So and this is the mindset, right? And this is where people get kind of like, they trick themselves. Like, they'll be where they'll do this trade and they'll jump it and they'll say, okay, 10-minute, and it's the same rule. So the 10-minute gets above positive, it breaks the 10 threshold, right? Like on our moon indicator. When it comes back down and retests, we take that entry, and then it pushes up. Now there's always going to be a bounce there, and what happens is you'll take a 30 to 40% gain, right? And then from there you'll do that 4 or 5 times, and then one time it like takes off running, and you take a 30% gain, but then you see it just goes crazy, and you're like, man, if I stayed in, I would have
Yeah.
made X amount of money, right?
Right.
And you take that, yeah, you take that one time or maybe three times out of 10, and it becomes the goal, and so
Right.
you start holding the other 7 out of 10 times trying to get that 3 out of 10, and those 7 out of 10 end up going negative for 20% losses.
Right.
So then now you're
Yeah.
like, man, yeah, you talked yourself into a trade that isn't it isn't the normal. It's the abnormal.
Right. And I'm not really worried about the long trades at the moment. I just want to be consistent at the 30 percenters or 35 percenters before I start betting a little more money. I mean, unless I'm following you with unless I know that the wave one is and I can see it myself, I don't trust myself
What normal people are doing.
any of that stuff. So I'm just, I just want to get more consistent of getting just the 30% profits and then start putting more money with the 30% profits. Then I'll worry about the longer trade.
Yeah, no, see that's why, and that's the other thing I was talking about was, because I was, back in, because everything changes with the market sides and like how everything moves. So that's why I was like, maybe the problem is because what I'm doing is I'm looking at how the students that are coming in are trading, right? So for you, I see that, and I think, and this has been a problem that kind of like is always in there, like it's always like over trading, right? And then I'm like, why is this such a hard thing to be? Because you'll have a guy like Ghost comes in, DJ Ghost, right? He's a very simple dude. He's a funny dude, but he's a very simple guy where all he does, and there's other couple guys that my students that they're very simplistic. They know that we take 20 to 30% profits, and then we wait for a trade to come again, right? And that's all they do. They do not overtrade. And they're like in their mind, they're like, yeah, man, I take your 20 to 30% profits, and then I just wait for the next coin to do the same thing. And when I talk to them, it's so simple. But most people on the spectrum cannot take 20 to 30% and be like, okay. And when I I spent some time I called up a couple of the students that were doing that. And I just wanted to kind of like understand what was going on in their brain, right? To figure out why are these guys so easily understanding what we do. And here's the one thing that mattered, right? And this is why you've seen me change and I gotta change the process because what was happening was this, right? The guys who do the 20 to 30% gains, and they're totally happy with it, right? So out of 10 people that I talk to, 7 of them invest $1,000 to $10,000 a trade.
Yeah, they're comfortable with themselves.
Yeah. So when they do make 20%, it's $200 to $2,000, right?
Right.
So for them, it's like, yeah, man, I do maybe 5 trades a week. Now that's either $1,000 or 10,000 for the week. And I was like, and it kept being the same scenario, and I was like, okay, so what? So this is the reason why people are over trade or want to jump a trade or hold a trade is because of the one thing I always talk about. It's not about profits, it's about percentages. And I think what I try to do is repeat that in every video that I made back in the day in the academy, which I did. Every time I start a video, I'd be like, and don't forget, guys, it's about percentages, not profits, because right now all you're learning is how to make percentages, and then you will add more money and then you will double your triples and do 10x on your profits. And that's what they understood. It was all about learning percentages. Profits come later. And this time around, I haven't really said it in every video. And after talking to the guys, I'm like, maybe the issue is that, because we tell everyone don't overtrade, don't put trade 50 to 100, don't trade 500 when you're learning, right? And what that does is it takes away the profits that are coming in, And then I think people feel like, you know, if they when they see $100 trade and they make 30%, they're like, all right, $30. And then they do another one at like $30. And then after a couple trades, they're like, man, if I was doing my 1,000, I'd be up 900, right? So it's like they're always worried about the profits, but not the percentages. So they're always like talking themselves out of the system. So that's why I was like, you know what? Making trading easy should be where we're only doing not, you know, because I use the videos and the time frames. I'll explain there's C trades, B trades, and A trades. And I was like, yo, you know, let's just focus on the A trade. And then by being patient and waiting on these A trades to happen, because you have ups, these are just focusing on the longs, we can always short these trades. But when you're just focusing on the long, I said, you know, if we do 2 or 3 of these a week on one coin that we're tracking, this is where, that's why I said, you know, we need to start just going with the $500 and $1,000 trade. So that way,
I still only do $100 or $150. It just depends where the slide is. I don't see the price on my phone, and I'll just type it in. I just move the slide over 10, 15% or whatever it is. Sometimes it's $25. Sometimes it's $200.
Right. And that's where I changed that, because I was like, you know what? The problem is that I can't change the human behavior to stop looking at profits. Right? Because that's a mentality. That would be me, you know, every single day you're coming into class and I'm yelling at you that you need to look at percentages, not profits. Right? And if I instilled that in you every single day, and I would literally have to post it on the Discord 20 times a day. So every time you came to Discord, you saw it, and you saw it, and you saw it. And you're like, percentages, not profits. Percentages, not profit. It has to become our motto. Right? And we're going to still push that out there. But then I realized, like, that's the problem, is that no matter how many times I say it, everyone still says, man, I made 30%, but that was only on $50. So I made $15. Right? They don't get that they're mastering the 30%. And then they like, okay, so then I tried $500, but then they didn't follow the system, which is what confuses me. If you do a system, you know, and then you jump trades because you have a feeling, or you're starting to think that you understand what's going to happen versus letting what was supposed to happen. That's why we put the rules in there. So that way, before you make a long, you're like, okay, this has to at least happen. You know, and then you understand if this is a C trade, you just have to take the early profits. If it's a B trade, you got to take the early profit. If it's an A trade, then you can see a little more push here and there. But it's like, if we made the profits big enough that people weren't trying to overtrade, then maybe we can just eliminate. So that's where I'm at right now, is just saying, you know what, fuck it. Let's do the $500, $1,000 trade. So that way, when they do make 30%, they're like, okay, you know, that's $150. They won't be in such a hurry to jump another trade. You know what I mean?
Oh, no, you're right, because I've done it 100 times. I've won $50, turn around, lose 150.
Right. And that's where the, you know, the worst trader is like, hey, you have to manage the law. It's okay to lose. The system, that's what I'm saying. We're trading systematically, right? Yeah. If you're winning $50 bags, you can't go to 500, right? You gotta start moving differently. You gotta go 50 to 100, right? 100, right? And I'm like, you know what? If we're doing A trades, right? We just focus on doing a really good trade, right? And we did 10 of those trades. Even if you lost half of them and you were just terrible, if you took a 20% stop loss, right? And you did a 60% take profit, the five that you lost would only be, you know, $1,000 or so, but the wins would be $2,500. So you'd be up $1,500, $2,000 at the end of every 10 trades after losses, after fees. And then you'd be like, oh, okay, this works and I'm terrible. And the only thing you can do from there is actually get better. Like enter better, right? You know, simple things.
It's not over trading. Slow down on trading just consistently. Even though that's what I like to do, but I'm trying to slow down on that. trying to see the bottoms a little more clear since I watched you the last couple of times with the bottoms, starting to see it a little better. And then the shorts, it's getting a little better.
Yeah, no. I mean,
still do too many shorts.
Yeah, no. I mean, but I like shorts because especially in a market like this, you can it's showing us that the volume isn't staying. So we're getting more possible shorts than normal, and they normally push harder than normal, right? Shorts are kind of easy because once you realize that shorts always go down to the next Fibonacci and then they bounce. And if you see a bounce that doesn't actually have a lot of juice in it, then you know the next target's going to be. And if that one doesn't jump hard, you're like, oh, this is actually getting weaker, right? And then once you hit those couple of targets, you're like, all right, now I got to look for a floor. There's got to be somewhere here in one of these lines that everyone thinks is going to be where this bounces, right? So it's like once you start thinking of, that's why we include the Fibonacci's, that's why we include the Elliott waves, so that you have an understanding of what everyone else is thinking, right? But at the end of the day, if we just go by the rule, right? Like for instance, right now in Solana, right? If we wanted to do a long trade somewhere around here, the rule is above the 10 threshold on a positive line. So we would need the 10-minute or the 15-minute, which would be better. We would need one of those volume lines to be above the positive and above the 10 threshold in order for us to say, okay, we're going to go long eventually here, right? Without that, then all we do is we go the opposite way, right? Which is shorting, which is when it rejects off the positive line and goes the other direction, we short, and then we stay in those shorts until it shows that it can break that positive line. So it's the exact opposite, but it's the same rules.
Right.
So that's what I'll do.
Got to where if I'm betting $100, then I've got to stick it in my head that I can lose that $100. Because once it goes, with the fees and everything, you got to get above that before you're in the green. Well, when you're in the red, you start with the negative, and you're already negative when you negative $5. So if you got a $15 fee for say $250, and you got this $15 fee, well you lose $5, you're already at $20. So your mind kind of messes with you when it's like that already.
Yeah, that's why.
When it goes green and you get above the $15, well as long as I stay above $20, then I know I'm in profit.
And that's why I made the video of like, hey, listen, once we have a system here that's designed to have 5 losses, you just with fees and everything, you accept it. But when you're not trading inside the system, that's where you mess up your own numbers. Like, okay, I'm going to follow what I'm doing. I'm going to make the trade every single time the way I'm supposed to. And if I win half of these like I'm supposed to, then I will be in a situation that I'm where I'm supposed to be, right? So that is like the epitome of like the trading side, and that's why I say we're always talking about like just the basic setup of like mentality. That's where the trades really, it's a mental game, right? That's why having a boot camp or having something set up to where it's understanding what you have to do as a trader to accomplish the goals that you're trying to accomplish, right? You're not going. Go ahead.
Trade, waiting for the green moon, waiting for the 1 hour pullback. I just want to make me a little checklist. I can stick on a sticky note next to the damn computer while I'm trying to remind my forehead that need to take our time and this is what I need to wait for.
Yeah. So And that's what
I
I
really
mean.
got
Like,
the videos. It's just I forget about the videos, and so I can't find some of the videos to go back and look for them. Like the other video that we did where you did the auto Fibonacci's and redid your settings on them.
hmm
I've been wanting to go back and look for that, and I ain't found it yet.
so that is, so, and there's different Fibonacci's, right? So I'll go back and, because right now, the reason why I redid those videos were just because, we were getting into, when you have more information, like a lot of guys were like, I don't trade against the 15 RSI, I don't do this. So they're talking about things that are like rules that they follow. So that's why I made the rule video, and I just wanted to make one rule that was simple, right? Because we don't want to, yeah.
Videos work. It's just it's a little bit. It takes a little more for me to comprehend. That's all.
Yeah. No, but that's why we have these conversations, because at the end of the day, it's it's about the student, right? That's why we're always talking to the people taking the courses, because we need to understand how you hear it, what you're seeing, because the goal is to find the issue, right? And like I said, trading with you, you're trading a lot of trades, and your mentality, like how you see the trade, what you're coming across. What I noticed was, that's why it made me call the trader. So we always focus on we focus on percentages, not money, not gains. And
Right.
and that's the one thing, like, because I was watching all your posts and everything you were saying, and it was always about the money, the gains, right? The losses, the fees, right? Because I'm like, you're paying so much attention to the fees of the trade and the gains. It's like you're actually like, and that tells me right away that you are not trading systematically, right? No, that tells me that you're just out there. You're kind of like winging the trade around, and you're looking for the trade to do well. But when you're trading so much, and you're putting yourself in a position where fees and all these things matter, that's like the first sign of a non-systematic trader, right? And that's where understanding what most traders are doing, right? So most kind of like that's why when you look at all these issues that everybody's having, you're trying to solve. This isn't about systems, right? Because the systems are designed on very, the crazy thing about trading is that the hedge funds, the market makers, all these people have trades that they do based on very simple strategies, right? That's why there are the Fibonacci's, right? And then from the Fibonacci's, those create the Elliott waves. And then from that, but they trade on a thing the Wyckoff system, right? Richard Wyckoff, right? Yep. And that system has been known. I mean, we've known about that system over 100 years, and it's the same system over and over. And it was kind of like, it's a systematic system that they use, and they don't change it, because all it does is work, right? It works in their favor. It works to how they trade, and it's weird because everyone else sitting on the outside, whether you're learning, coming into trading, starting trading, or whatever, it's like they tell you, hey, these are the rules that we play by, and it's like everyone else wants to like diversify from the rules of the market, right? And it's like you have a cheat sheet of ideals of what could happen, but everyone's always trying to reinvent the wheel instead of push it, right?
Right. Yeah, that's all I want to do is follow the wheel. But I get it. Don't get me wrong. That's why I started slowing down the trades, because that's where I started losing more. So I might do good first 2 or 3 trades, and then it goes downhill after that.
Yeah.
So I started slowing down on the trades to where I get 1 or 2 good trades a day. I'm gonna try and hold on to it. I still end up doing one more trade or something and go in the negative, and I try to stop. But usually when I stop, I'll end up putting in $300-400 because heck yeah, this is gonna be a good trade right here. I'll get
So tell me, like, okay, so that okay, so walk me through the three trades, right? What's are they all the same amount?
No, I ain't never the same amount. I mean, because I'm doing it on my phone while I'm at work and in my Jeep, and I'm not. And on the phone, when you're looking at BitNix, and you're going to push your slide over,
Mm-hmm.
with the 10%, 20%, whatever. Well, depending on how much money that I have in the futures account, is what it is. Some days, if I put deposit more money, it's more. I don't go in there and just put $50 on it and go with it every time. And so that's what, because like when you're on the computer, you slide the slide over, you can see how much it's going to cost you. On the phone, you can't.
Which is it on the phone? Can you see how much is in your available wallet?
Oh yeah. But I
Yeah.
mean, yeah, you can see how much is available to
Okay.
use for futures. But every trade it changes. If you lose, well, it changes. So, and I'll try to usually just put like 10, 15, 20%. And sometimes I forget that I might add $1,000 in there, and it end up being $200. Or if I'm in or a lot of times I will see a trade that I think's fixing to take off from the bottom, and I'll hit that limit order, and then instead of putting a number in there, I'll just hit the limit order and put buy, and it'll drop it way down low. So I'll cancel back out of it, and by the time I go back to market on my phone and hit it again, well, then I done hit the top of the bar, so then it just wants to turn around and bounce a little bit and go back down.
Holy shit! Yeah. See that? All right. So yeah. So that's the yeah. So those are like yes. Ooh. Yeah, that you can't do.
Impulse buying.
Yeah. You can't do any of that.
Right.
Like that's like you're like making 7 mistakes in one run. So like you're not doing limit orders. You're buying you're buying market orders, and then if they buy the market order is always going to take the worst price, and then when it does that to you, you sell and then go back and rebuy.
Yeah.
Yeah,
So
you
it
can't.
costs me
Yeah,
4 times as much.
that's
I mean,
why.
I try to buy limit orders now, like if it's going down or whatever. If it's red candle, green candle, whatever, I hit limit order. But it seems like it never goes back down. It takes off, and then I panic buy it.
Then you panic buy. Okay, yeah. So I mean, all right. So I am like the videos that I'm making. Because I didn't realize you were doing this other shit, but the videos that I'm making right now, where they're in the student videos, but they're on the intro, those videos are geared to impulse buying and buying incorrectly. And I mentioned in those videos how, like, when you set your limit orders, right? And I'll make another video that'll kind of, like, focus on that because that's what you have to do is, like, the details that are not being hit are what we have to do. So what's happening to you is, and I mentioned this in video, I talk about this all the time, is that if you set a limit order and it doesn't hit, it doesn't matter. Because that's just a trade that you didn't get, right? And
Yep.
I think what we have to do here is maybe expand our, and this is what I was talking about, like, how to be the worst trader possible and make 24 grand, and then that's per coin. So if you start adding more coins, then you make more. So I think right now, because I'm only focusing on Solana, because
And
it's,
that's all I'm trying to focus on is
yeah.
Solana. I ain't trying to worry about nothing else.
Yeah, and I think like maybe adding probably another coin in here, so that way if you're setting a limit order, you have another limit order on another coin. You know what I mean? And if one doesn't hit, then you're good. But if the other one hits, you're good. But it gives you more opportunity. But the whole thing, the one thing I talk about all the time is you can't. If it doesn't hit, it's okay. You just have to adjust to the next pullback because no matter what, there's going to be another trade possibility, another entry. The reason why is because retail investors are so terrible at investing that they open up opportunity. They sell too early, it pulls back, then they buy again, and then they constantly
Yep.
ruin the movement of the chart, right? So that's why I say so. That's where Yeah, and once you buy, like you're in, right? Because once you buy again, you're gonna pay the same. You're paying another. That's why you're so focused on fees. Is you're costing yourself. Once you buy, it's a $10. Let's just say $10, and if it's not the
Right,
price you want, you put in another. You sell, and then you buy again, and now you're in for $20, right?
right,
But you didn't even have a chance to win or lose, right?
right,
And a lot of times,
right,
if you're in at the wrong price, and you say, you know what, I'm instead of my stop loss being for $10, I'm gonna make my stop loss 20, and you say, man, I'm giving up $20 here, an extra 10 on my stop loss. Well, the reality is, if you sell, you're gonna give up that extra 10 anyways.
right.
All you're doing
Yep,
there is you're just giving yourself the opportunity to actually, get lucky, right?
exactly.
But you have to do, um, there has to be a step or a system where even if you're panic buying, right, you have to have a reason of the entry of the panic buy, meaning a pullback, right? The dip, right?
Yep,
A 3 minute pullback, right? We talk about that all the time. We're gonna buy the 2 minute blue moon reset, right? Or if
yep,
you want to make sure you don't miss anything, do a 1 minute reset. See the 1 minute pullback, and then buy the 1 minute pullback side, right? You just can't
yep.
pull the trigger without knowing why. That's why I'm always like, why did you, where, what made you enter, right? That's the question I ask you a lot. Like,
Yeah,
okay, well,
and the reason is because I'll go all the way back to the 15-second chart, and I'll start watching stuff start turning around, and then I'll go to the when it like I say when it turns around, I'll go to the 1 minute and watch it come up. Yeah, I usually watch it all the way come up to the 2 minute, and then the 2 minute I'll usually enter before the 2 minute, thinking it's going, the 3 minutes going, no matter what. But I will go back to the 15-second movement to watch once the stuff's fixing to start turning.
yeah, see the fit that right there, you're causing yourself anxiety on that, because 15 seconds is not enough, because what you're watching is, and the way to explain that is this, right, is that the exchanges have order blocks, right,
Right,
and all these orders are in this one block. Now, just because the orders are there doesn't mean they're showing up right at that time, because it's just like when you say open market buy, and you say I'm buying $100 worth of Solana and it's open market. They just grab the first 100 options to close out. When you put a limit buy, right, they have to go find 100 Solanas at your limit. So there's some people might be selling 10 Solanas at your limit, 15, 5, 2, right? So when you're watching the 15-second, it is going it's like it's not a true indicator of the volume, simply
right,
because the orders are being filled in different areas. There might be a shitload of sell orders that are waiting to be filled, but the market, the exchanges are filling the buy orders right now because they're all market orders. So they're
right,
overriding the true sell. And then all of a sudden you see the bounce on the 15 second, and then you're like, oh, okay. And then it pulls back a little, and then you see another bounce, and you're like, oh, it's starting to make movement. Then you go to the 1 minute, and the 1 minute is showing the reflection of the 15 seconds. But then by the time it makes its move, all the sell orders come in.
right. And I watched the orange line on the 15 seconds. As soon as it starts turning around, I'll watch it all the way up to the 3 minute before I try to enter. But I do get carried away sometimes.
Yeah, yeah,
Most of
yeah.
the time.
That's you need to stay off. Like the only the minimum, right? The time frame, the slowest one. The reason why we use the 1 minute is just so you can see where there's impulses, right? Where you can start
Yep.
to see where there's slight adjustments to pullbacks, higher highs, higher lows. Yeah, 15 second is like, even the 1 minute's not a great representation, but it's 4 times better than what you're looking at.
Oh yeah,
Yeah, yeah. So you need to stop looking at the 15 second. You need to focus just on the 1 minute, because that is something that we do use for, like, when I'm pointing out, entries into pullbacks and things like that, I do use the 1 minute for you guys to kind of like represent where you can see strength and power.
Right. Or if I'm worried about it barely making about 30%, I'll go to that back and I'll kiss myself all the time watching the 1 minute
Yeah.
or the 3 minute.
Yeah.
And I'll bounce back and forth between those, but usually it's the 1 minute. But as soon as it starts to pull back, I'll get out if I close to my 30%.
Yeah, but and that's what that's causing is it's causing a massive that's you so oof. That's a lot of like trading on one coin when there's like particular moves that are coming, right? So this is where the first thing you need to do is this, right? You can take the system, okay? You can take the system and you can move it to different time frames, right? So we have a 30-minute rule, right? And the system is based on this. If you make 10 trades and lose half of them, the wins need to be 60%. The losses need to be 30% and less. And that means every 10 trades you do, you will double your bag. So if you're doing $1,000 trade and you're doing that, you will make $1,000 at the end of 10 trades. Now, those are just, think of them as the fundamental rules of the universe, right? There's no changing the fundamental rules of the universe. Like, that's just the way it is. Now, that is all based on the systematic movements of doing 10 trades, losing 50% of them. And this just comes from like literally data. If you Google anything like that's kind of where I was showing in that other video, the Googling of like how many traders make money, right? And when you go through this, it tells you systematically like what it is, right? So it'll say here, a very small percentage of traders are constantly profitable. Statistics suggest that between 1% and 15% of day traders achieve long-term success, right? So that means that 1 to 15%. So we say at the end of the day 10%. So that means 90% of day traders are unsuccessful, right? And then it goes on to say that with some sources showing even lower rates for consistency profitable traders, net fees, most traders, particularly those who are active participants, tend to lose money due to factors like lack of experience, emotional decision making, and ineffective risk management. Right? So
I don't get too emotional now until I get to losing $200-300.
Yeah. No, the emotion is not your problem. The problem for you is that you basically just the lack of experience, but your risk management is terrible.
Yes.
Right? And that's why the system that we have, the Making Trading Easy system, is a 10 trade system, right? Because you don't normally, when you do a trade system, it'd be like out of 100, but we do 10 trades because we know that crypto trading, you're going to do more trades, and you just have to have a system that brings you profit within a month, right? So when you're doing this, you have to have, that's why we always talk about 1-2 steps, step 1, step 2. If you're repeating the same steps, right, then you getting a data result, meaning it tells you based on how you're trading if you're profitable or not, right? And when you are kind of like, and you always want to trade the same amount so that what you win, because here's what happens to you. It's when you're doing your slider, you'll do a slide and you'll say, okay, let me do 25% of my bag, right? And you don't see the amount, but you just put it on there, and then that trade loses, and then you're like, oh, and the next trade comes in, you're like, let me do 25% of this, and that trade loses 20%. So the first trade loses 20-30, the next trade loses 30, the next trade you do 25%. It runs for 100%, right? But it is basically almost 50% of what the other trades were, so that 100% equaled the losses that you had. So then you'd go and you win another trade, another 30-40%, and it's like, oh, I'm having a good day. And then you close out your day and you say, you know what, this trade is the one I've been waiting for, and you do 50%, and then you take that 30% loss. And what you've done is you haven't put the numbers, the same numbers together each time. So even though you had 80% wins, 100% wins, those were on $50 trades, and your losses were on $100 trades.
Yep.
So it doesn't.
That's usually the way it happens. The good ones I have like $15. Slide didn't go far enough.
Right. And this is what you have to do. I understand on your cell phone you can't see the amount of money, but you can see what's available.
Yes.
So you have to, put, like I said, we want to be $500 to $1,000, right? So you want to put at least in there, if you're doing these minimal trades, put $1,000 in there, and then say, okay, here is my $1,000 for the week, and here's what I'm going to do, right? When you first make a trade, we know that if we're going to do a trade on the $1,000 side, if you slid the bar to 25%, we knew that would be 250, right? 20 would be 200, right? Very simple.
Yeah.
So slide it to 20, make your trade, okay? Your stop loss, and this is where I think I'm gonna change your, because you understand it's crazy because you're like you're in the middle of you see what's happening and you understand what's supposed to, but then you're not using any of the system of having the same bag, the same motions, the same entries, the limit orders, and then you're kind of like tearing up your own wins because the wins are worth nothing and your losses are full trades. And it's like, and it never makes sense because you're not seeing that after 10 trades, even if you lost half of them, you're not seeing the gain you were supposed to have because the wins were on $15, but the losses were on 100. So then that's where it's like, oh, I lost money. Yeah, because you're not in the system, right? So you have to kind of put yourself in that moment of saying, okay, and write it down. This is how easy it is, right? And I did a video of this a long time ago. You're not the only person who does this shit. Okay, so when you do the first trade, put $1,000 in. Do a 20% trade. That's 200. You have a 20% stop loss, right? When that loss comes in, we know that we're going to be down to 700. Okay? So this is just walking you through the first trade you make doesn't work out. You're at 700. You go down and you look down, and this is where you can put a notepad and you can put there, right? And what you do is you write down what your percent needs to be. So you put down and you say, okay, and you can do for wins too. So start with it. So put $1,000 in there, and then start at $2,000 on your notepad. And your notepad would say at $2,000, I need to risk 10%. If I have $1,900, I need to risk 13%. If I'm at $1,800, right, and you put this all the way down your list. So when you get to 1,000, you're like, all right, if I have $1,000 as my available, my trade is 20%. If I have $900 available, right, we know that if you did 10% of 900, it would be 90. So 20% of that would be 180. So you'd have to do 23% to make the 200, right? So you're like 23%, right? If I have $800 in there, I have to risk, right? And breaking down 800, right? Half of that's 4, quarter that's 200. So that means that when you're at 800, you have to risk 25%. When you get down to 700, you have to. You see what I'm saying?
Yeah.
So when you look at your available, and if you look down and you're like, shit, I'm at $800, that means I have to, this slide has to go to 25 because I have to trade $200. So every time you make a trade, it's $200. That's the first thing you have to do is you have to basically put your trading bag at the same amount. So whether you lose or win, you know what you're getting or you know what you're losing. Right? That's the first part. Because it doesn't, when you're tracking trades, you can lose 2 trades in a row for 20%, 20%, or 30-30. But then your next trade goes for 100, but the 2 losing trades were at 200, 150, and then your winning trade was at 75, which basically broke even. So you didn't get
Yeah.
the gains that you needed to make up for your losses.
Right.
Right. So that's the first thing you have to fix. Like, because when you do win, you need the gains of a true trade. Because that's where,
Yeah.
even on the basics of a trader losing, you have to have the same amount of the bag. Now, with that being said, that is just the basic how to start trading 101. Okay? Now,
Right.
part 2 of it is systematic trading, right? Not emotional. You're not emotional, which is great, but now you need a system, right? And the system,
That's why I was kind of asking for like a checklist rule to follow something mandatory. Look, if it don't check the mark, then don't just stay out of it.
right. And that's so, okay, so when you're in the trading system, right? The Making Trading Easy system, we have a 30-minute rule, right?
Yeah.
And the reason why we have the 30-minute rule is just so that you understand that you can't take longs unless the 30-minute rule is actually like in effect, right? So what you can do is you can just, if you're and this is like I'm saying, you're testing it. We talk about the 30-minute rule because we're working on one particular trade, which is the what we call A trades, right? Master trades.
And that's great. That's fine. If it comes once a month, I'm happy. I just want to learn one thing to get where I'm starting to get consistent before I try to do something different, I guess.
Yeah. No. I know what you. Believe me, but what you have to do is like this is why we have the boot camps of mentality. You're the type of person. This is gonna be the man in the mirror. That's why we always talk about this. There's all types of systems that work, right? There's all types of ways to trade that work. It's what the individual does that makes it where they lose, right?
That's 100% right.
Yeah, 100%. It's always the person. And your one thing is that you'll make a bunch of trades. Your winning trades are 10% of your losing trades, and it's like you're not getting back the profit that you need. So then you end up losing, right? So that's one thing you can fix, and that's a personal thing, right? That's what you're doing, is not managing your entries correctly with the same amount of money. The second thing is we talk about learning one trade, right? So that's why when we're inside the Discord, the one thing we talk about is like the A trade, the master trade, the 4-hour trade, right? We're hunting a 4-hour trade, 4-hour trade, 4-hour trade. And then we explain that if the trade doesn't do what it's supposed to do, then we can short it, right? If it doesn't do what we expect, then we know what it will do. And that's because if you're tracking an A trade, and an A trade is completely based on volume and money, and the money and volume doesn't show up, that means it's going to short, because all the people that are waiting to go long are going to realize there's no money. And guess what? When there's no money, there's no volume. And if there's no volume, then people sell because they know that they're in at the wrong area.
Right.
So that's a systematic system. And that's what moneymakers do, and that's what hedge funds do. If they bought something and it reaches a point where it no longer goes up, then there's no one buying it. So why would they hold it?
Right.
They're going to sell it and let the market determine what price that retail investors think is a good price, and then they're going to let it go below that, so that way they have a target, right? And let me explain what that is. If you see a drop in the market and it hits a price and retail investors start buying, the market makers and hedge funds know that if it was $250, like Solana, right? Solana was sitting at $250. Okay. Now, what did I say back on September 8th? I said we're going to 250. Right. And we could have just bought. We could have just held. So if you had a separate account, and this is where we have to kind of go for the other people's, that if you have a separate account and you're just want to get into a market move where you're hodling, right? It wouldn't be bad for us to put $10,000 on Solana at 176 when I told everyone it was going to 250. We could have did a simple 5 or 10x and just let that ride out. And we would have got 70, 50, 60, 70% on our money, right? But and let me see how much that is. Let me see Solana. So if we went in here and Solana was
Yeah, I'm
sitting.
just now getting back even on my bags of Solana I had. Not really bag, it's just change of Solana I had. Because I bought it when it was up, then it come back down,
Yeah.
and now it's just now more or less coming back up to the.
So that call out, right? This is why there's different systems. That call out, so we would have just bought at 180, the 176 area I was talking about, and we went up to
Yep.
250 like we just did. Now it took 20 days, or what would it take? 10 days, 15 days. So within 15 days, we got our 38%. Now, had we just done 10%, or let's just say, yeah, we'll do 10% on 10 grand. That's 380%. So that's, you see what I'm saying? That's almost $40,000.
Right.
But cut that in half and say you did 5% to protect yourself in the market. It's still 20 grand on one trade, right?
Right.
And that's where, maybe I need to incorporate explaining, because you hear a lot of my other students come into the thing from the academy. They'll say, "Nah, VC, we want to know about your big trades," right? And what they're talking about is they know I do what's called position trades, right? Which is where I'm buying the bottoms of the market, and this is for hodlers, people that are the bigger side. This is when you have $10,000, $20,000, you buy Solana, right? Now we were calling out Solana, you know, uh, way back. Let me see where it was here. So, Soul.
And see, I mean, I got bags of a bunch of different cryptos that I've been holding. I've been buying since 21 and
Mm-hmm.
holding throughout the years. And I just been holding it. Ain't did nothing with it. Well, when XRP got to come back on to an exchange, I bought some at like 60 cents or whatever it was. And then I think November or whatever, just November,
Mm-hmm.
it all went up, and all of a sudden, everybody, everything's fixing to drop. My dumb ass sold some of my XRP, and then turned around and ended up buying it. Now I'm at an average of like $1.20.
Eesh. Yeah. But that's what I'm saying. Like,
Still holding it.
I think this is what I'm going to incorporate. Kind of like when you see me post, like on September, like August 8th. So 6 weeks ago, on August 8th, I posted like everything about the market. I was like, all right, Solana long, everyone. It's cooking, holding this area, building, et cetera, et cetera. And then at the end of that post there, I wrote, the tide is turning for longs. And, that was just to let us know that we're almost, we're almost heading out of the negative part of the market, where we'll make a run till November 1st. And then we'll short again for Christmas. But then I said, but till then, we're looking for $250 Solana, right?
Right.
So that was way back on, August 8th. And that's
Yeah, I
because,
remember that.
that was just because, we know that by watching the system and everything, we know where we're at as far as like what's supposed to happen, right? And that's why I say and I'm going to make this video to basically show the bigger, broader version of time frames, because that's why time frames are so important, is because we can see based on a daily, a weekly, that where we're headed and where we're going. And then within that big move from 170 to 250, there are going to be wave 1, wave 2, wave 3s, right? They're just going to happen 1,000 times within that time period, because it's going to take 6 weeks to where we're going. But it's the same exact system that we use on the 30-minute rule. It just happens to be set on a higher time frame, right? So that's why when we're using our moon indicator, that's why I kind of got away from talking about the RSIs in the last videos, because I think sometimes the RSI doesn't have the RSI has a top of 100 and a bottom of 0, and it goes from 0 to 100. Now sometimes the RSI will get what we call pinned to the bottom or pinned to the top, and then it'll continue to drop further, or to continue to go up. The reason why we have the moon indicator, the reason why we use our indicator, is because there is no top or bottom to it. It runs until
Right.
the money's gone, and it goes until the money shows up.
Yeah,
That
and I catch myself zooming, watching the moon indicator more than the chart.
yeah. That's where you need to be because the moon
I'll
indicator
make it
is the
full
chart.
screen.
Yeah. The moon indicator is the chart. The only difference is
Yeah.
the moon indicator is the money.
Right. I just try to be like the tops of it to where it's fixing to pull back. I'm trying to catch the curve of the curve before it starts to pull back instead of waiting for the blue moon after it done drop down a quarter.
Yeah. So all you're doing here is that's what I was saying. Like the time frames when we're working on the 30-minute rule, right? And the 30-minute rule is we do longs when we're above the positive, and we do shorts when we break below, right? And
Right.
if you look here, you can see where we had a positive move and a negative move, right? The only difference is
Yep.
when we do hodling or like long-term investments, we simply just move over to the daily, right? If you go to the daily,
Yep.
you can see here, and I could draw these lines out. They're not that hard. So I could post here just on my daily when I break above, right? I'm just gonna put these lines in here real quick. And when I break above these sections here where you're supposed to go long, right? It allows us to be in a situation that when we do have these moments, we don't have to really worry about what else is happening. We just know where it's going. So when I put these up here, I'm going to pull the main chart down, right? And I'm going to add these lines in here. But it's the same scenario. The only difference is, let me put this white. There we go. So this is our line. It's our other one. And then our other one. So the same rule that we teach you on the 30-minute is the same rule that you can apply, all the way to your daily. And what that means is that's what I was saying, like when you have a system, right? And let me show you guys how this looks here. When you guys have a system that you can go on, and I'm going to connect this one all the way down. I'm going to connect this one all the way down. Is that when you change, the time frames are the only things that we look at. So here you go, guys. So you can see here, based on our moon indicator, we knew that we should be buying Solana. Let me find a price label here. That I knew that I should have been buying Solana at $128. You see there? And I know that that is an A trade. So what is an A trade going to do? An A trade is normally going to run from its peak area up to about 40 to 100%. So we're getting close to our 100% mark, which would be about $260, right? You see this? See that 100%? So then if I put my price there, right, I know that price is $261 for Solana. So I can easily predict a $250 Solana, right? And this is where I think maybe explaining this to people to learn how to hodl correctly and then putting it into the system for you guys, maybe this having a daily understanding of the biggest time frames that we trade on will then teach you the fundamentals. And then if you just take this same stupid chart, and this is how beautiful this is, and you incorporate the Elliott waves, which is wave 1, 50% pullback, wave 2, and then wave 3, which is your biggest run, then a slight pullback to wave 4, and then wave 5 is the finish off, right? So
Yep.
it's always the same, right? And the time frames are what is important. So when you're telling me you're doing 15-second time frames, you're not in a time frame that produces enough percentage. That's why we trade minimum 10, right? When you're trading a 10-minute time frame, you're trading a time frame that is literally only going to produce a 0.5% to a 1% move. When you're trading 15 minutes, then you're going to be trading a 0.5 to 1.5% move. These are all considered C trades. And what C trades are, they're simply trades that are going to be trades that you have to trade high leverage, take profits at a certain point no matter what, because their stability of holding up is absolutely 80% that they will not, right? Easily. So you cannot long hold them, let them go. They're just not going to do the normal. They're not going to be normal up and downs and then a one wave, two wave, big explosion, right? They're very minute. So when you start moving, that's why we have a 30-minute rule, because we need the 30-minute rule to be in effect, because a 30-minute trade is a 1 to 3% trade. And most of the time, that 3-minute, that's considered basically the B trade, is that B trade will turn into an A trade, which is our 4-hour trade. So then with that momentum, we're able to go from 1 to 3%. Now we go from 1 to 7%. See what I'm saying?
Yeah.
And what that fixes is one of the number one issues with traders. So when you pull up why traders lose, this what they break down is very simple. Why most traders fail? Emotional decisions, right? Fear and greed can influence decisions. Now I know you're not trading emotionally, but you're trading on fees. So you have a little fear and greed in there, because you're like, oh, I paid $10, let me get out. Or they gave me the wrong order, it's too high. Then you close, and then you rebuy at a limit order that's cheaper, right? That's a little, that's fear and greed. Because you feared that you got in it, they gave you an order, or they give you a market order that was higher than you wanted to pay, so you feared that wasn't going to give you enough profit, so you sold and then rebought.
Well, it's not that I fear it ain't going to give me enough profit. I know that it ended up going in the red, and I was...
Right, your stop loss.
Took more profits.
Right. But see, that's see what I'm saying? That's emotional. That's greed. Right? When you're non-emotional, if you make the trade and you're like, all right, man, if it hits my number, then I'm out $30, or if it's on $1,000, I'm out $300, right? And then you can just sum that up and go, that was a bad trade on my part, but hopefully I get lucky. Or you say, you know what, I'm gonna just, and this is where you have to have an understanding of like, okay, so I put my $1,000 trade in, this cost me $100. If I close it and reopen, I'm gonna pay another $100. Right? If I put my stop loss here, which I'm expected to lose 300 at my 30%. So I can either say, you know what, I'm going to take this, my loss here at my 300, or I'm going to say, I think I got a bad entry, and I'm going to put my stop loss, instead of 30, I'm going to do 20%. So that way I'm only losing my 300. I'm not worried about my fees because I made a mistake here. Right? Or move it even lower and say, you know what, let me put this at 15% and just see how we do. And you take that smaller loss and say, okay, that's one of my losses. Even though it was in the system, but you have to realize by buying in later anyways, you're going to end up paying that anyways. And then
No, you're right.
Yeah, and that's just where it kind of sucks sometimes, but you have to go, that wasn't a system trade. So let me see what it is, right? And that's really just the lack of risk. So the next point that most traders fail is just lack of risk management, right? They say successful traders manage risk effectively through strategies like stop loss orders, profit taking points, right? And what do I talk about all the time? Stop loss, always put a stop loss, and always have profit taking points, right? And they say right here, which is a skill lacking in most new traders. The only thing I ever talk about is those two things.
Yeah, no, and a lot of times I put stop losses, but after it takes off. Because usually when I end up enter a trade, a lot of times it's staying right there at the support line. It'll bounce it up, it'll come down, and then once it takes off, man, I'll cut the stop loss down to 5-10%, but I ain't losing that much.
Mm-hmm.
Then it turns around and goes back and stop loss, and I lost it anyways. And I've moved it down where it's a little more, so it does come down some, then it'll go back up, or it'll go up and come back down like it's supposed to.
Right.
I've learned that the hard way.
Yeah. And
give her room to breathe.
Yeah, give her room to breathe. And that's because you're trading the lower time frames. When we start trading the higher time frames, the volume, right? That's why guys always hear me talk about. You hear guys come in and say, "Yo, VC, you need to put out your video on volume is king," right?
Yeah.
because that was all I talked about back in the day. Because some of this stuff is really like just so simple that I don't even really talk about it too much because it's like it's just like common sense. The volume is king. If there is money, it goes up. If there's no money, it goes down.
Right.
And it can't go up unless there's money. So if there's no volume, there's no long, right? So when you so when you put it in that like that simple perspective, and you're like, yeah, why the reason why we wait for a 30-minute confirmation of volume is because percentages, right? It's called the law of average, right? Meaning that if we had a law of average on C trades, 10-minute and 15-minute time frames, if we had a law of average, their law of average is that 7 out of 10 trades will do 0.5 to 1%. Three of those trades out of the 10 could do 2%. The weird thing is that people only remember the 3 trades that did 2%. They don't realize that the average was 0.5. So you can't hold those trades. You have to literally take the profits, right? That's why they say having profit targets taking is important. That's because the majority of retail investors, 90% of them, lose because they're trading lower time frames, doing snipers and scalping trades, and they don't understand that the C trades do not run, right? And that's where the donation happens, right? And that is just the way it is, right? And then what's interesting here is they have a point here: quitting too soon. Many active traders quit within a short period, often before developing the necessary skills and strategies for success. So, and that's another thing, is that the reason why that happens, that's actually a really interesting thing that they wrote there. I haven't seen that before. But that's because, they just give up, or they just don't understand that you have to learn. This is why having, the ability to have a system. Here's this other one. Probability is not just luck. I love this. I'm going to tell you something, bro. This new AI thing where I can type something in, and then instead of looking to go read a bunch of articles, the way AI takes all the bullet points, I love this shit. Because now I don't have to read 7 articles to and then explain what I'm trying to say. This thing says exactly what I've been saying for 10 years, and now I can just look at a bullet point. And they say it in a way that I'm like, that's a great way. Like, it says probability is not just luck. So when you hear me say the law of average, right? While a small percentage of traders are profitable, this success is not typically due to random luck, but rather superior judgment and expertise in a specific market conditions according to an analysis. I am going to use this as my headliner on all my videos. Probability is not just luck, right? And let me read this. A high activity versus, so highly active day traders trend to outperform occasional traders. Through outperforming doesn't always translate to consistent profits for most, right? And that's what we were talking about for you. That's so funny because you will outperform as you post your trades. You'll have more wins than losses, but your wins weren't worth shit, and your losses were worth the big bags. But see what I'm saying? This is 90% of the retail market. This is why, I talk to you and I ask you questions, because you're this guy, right? And solving how you're seeing things, because it's not always about not understanding. It's just trying to explain it to where it allows you to help change your behavior. Right? Because it's like, because something in there, you're seeing opportunity in the charts, but you're not executing, right? And now that I'm talking to you, I'm realizing that you're just sliding your bar, but you don't realize how much your bags are. And that's costing you all your gains. Right? So by simply making a video for that purpose right there, I could probably solve 90% of the people that lose why they fucking lose.
Right.
Because
there's lots of reasons why I lose, for sure.
Yeah.
And I'm kind of in the middle. I've been trying to trade crypto since last November. So to me, I'm right at the edge of where I'm almost set up with it, but I'm still trying to push forward with it. Because I'm like every trader, learning. I've spent a lot of learning money, and you don't know if you you just give up, cut your losses, or you keep pushing through and making yourself get it sooner or later.
Yeah.
That's why I came. That's why I came to you the first time when I saw your first videos. Is hey, I gotta do this. I know I can do this. Hell, I'm still struggling with trying to keep pushing through it sometimes.
Yeah, and that's where the
because of my bad habit.
Yeah, no, this is why people are always like, "Yo, VC, you talk to a lot." I'm like, I have to talk because I gotta hear them. I gotta talk to the students and the people trading because there's something they're doing wrong. Because in my mind, I'm so systematic, right? I'm all about numbers, percentages, and I know that if you suck at trading at 50%, if you can only win 5 out of 10, or I even did a video where I broke it down to 4 out of 10, right? You watched that whole video? And even if you did 4 out of 10, you could still make $100,000 a year. So I'm like, you could be terrible at this shit and make money. So I'm so fucking confused on how it doesn't, because I'm interested in how people are failing, how it is 90% of people have, and there's only a 1 to 15% chance of people being successful in trading, which is an average of 9 or 10. And it's like, man, how does 90% of people can't make money? And then I look at say, okay, stocks are different. Stocks are fucked up, right? This is crypto. Like these stats are mostly, derived through both sections. But if you really looked at crypto, it's like, man, you have so much more gains and so many more ways to make money. I'm like, you're like, we should see a 30% win rate in crypto. Like 30% of people should win in crypto. This shit is not that hard. And
it's like, everybody thinks it's like watching the 15-second time frame or something. If they're betting on that, then yes, it is. It's volatile. It moves up and down so much. But I just use it to watch for on like reversals or whatever.
Yeah.
When something's gonna turn around.
Yeah, and what you got to do is you got to let that 15-second go because it doesn't have enough data.
Right.
All right. We don't even like the 1 minute. Like when we talk about reversals or that, we start at the 5 minute. You know what I mean?
Yes. And that's where I guess I get confused because like in one of your videos, it was starting out 5 minute, I think, then it was 15 minute, then it went to 5 minute, then it's 10, 15. I think it started 15, then 5, then went to 30. I like, well, damn, what time frame am I supposed to be watching here now?
Yeah. No, but that's why I'm glad, because I wanted to go back. I'm gonna make videos of like when I post things, what we're posting, right? And it's so the main thing is this: we live and die on the 30-minute rule, right? And then that 30-minute rule can be moved to the 15-minute, right? If you want to see if you can pre-move, right? But then you're also that's the beauty of having these tools, is that if we go to the 15-minute, what we're able to do is we're able to adjust leverage to make up for the shorter moves, right? And just like on the bigger moves, when we use the daily, we don't need an 80% leverage. We can use a 10% leverage, increase our stop loss position, and then let 6 weeks go by. And most people will be like, man, I can't wait to make money for 6 weeks, bro. But yeah, if it was 10 grand, we just showed you how to make 400% on that.
Right, and that's when I got into trading crypto. That's what I was wanting to do, is like a swing trade, a long term, not long term
position trade. Yeah.
If it took 3 weeks to get, make $500, hey, that's awesome. That's $500 I didn't have to worry about 3 weeks of making,
Right. And I think that's
a little more trading, and I got hooked on it.
No, man, but I mean, it's fun. It's exciting, and the thing about trading, right? The one thing about trading is it's fun, exciting, and there is huge amounts of possibilities. But then we go past the limit of probability, right? We
Right.
start going to where we're putting all the percentages against our possibilities, and we're trading outside the law of average, right? The law of average is the law of average. It is the average, and if you're trading trying to break that average, you will lose every time.
Yes.
So
I'm,
first thing you have to do is take the law of average and then cut that in half and go, okay, I'm going based on half of my possibility. If the half of my possibility makes me profitable, then I can win here. And that's why winning 5 out of 10 trades, with a good system, puts you in
right.
profitability. Right? It all comes down to profit, like the law of average. And you got to work a system based on remember I talk about the 50-50 rule, right? That this is
Yep.
what should happen, cut that in half. Then once you have that number, cut that in half and say, okay, if I did this 50-50 part, how do I make this make money? Right? Because that means you're trading on a 25% possibility. So you're already in the downside, right? So if you can
Right.
make the downside work, then when it does bounce and there is a good market and all this other shit happens, that just means you're going to make 2 to 3 times more than you normally do, but you are going to win 100 to 200% more of your opportunities simply because you're already trading on the worst case scenario.
Right. And
That's
that's
what,
that's
yeah,
the main thing is I need to stick to a system that you teach and make myself stick to it. Don't do nothing else.
right. And if you want to, like, I mean, uh, and there's ways to adjust, right? So, for instance, take our 30-minute moon rule, right? We know that no matter what happens, right? Like Solana right now, right? So, Solana, let me go back over to our 30 minutes, right? So, I'm going to jump over here, 30 minutes. All right, let me pull up the moon indicator. All right, there we go. Okay, so we know on our indicator there's one thing that we do. We can't make any long decisions until the 30-minute is above the center line, right? Or in this,
Right.
for TikTok's purpose, the yellow line. So we can't do anything until, there are no longs until we break that. So the rule of our 30-minute is that when the moon line breaks over that line, we can make a trade. So
Yeah.
what you can do is this, and that's based on we're leveraging at that point. We're leveraging 70 to 80% long. What you can do is go down and say, okay, I'm gonna go and say I'm gonna take the same rules that we have, and I'm gonna slide down to the 15-minute. And now that opens up another category of trades. Now they're not going to be A trades or the possibility or B trades that go into A trades. These are going to be C trades that go into B trades. So being aware of what you're trading is the very first thing you have to do. You have to say to yourself, okay, I know that on my trades here, because they're C trades, the best I'm ever going to do is every 3 out of 10, right? It's always important to have the luxury of like knowing your percentages. I know 3 out of 10 of these trades will become B trades, right? Not our best trade, but at least B trades, right? And
Right.
3 out of 10 B trades will become A trades, right? So we know that when we're trading on the 15-minute, you already know that you have to execute the profit targeting targets. You have to take the 30 to 40%, right? Whatever
Right.
the average is. And we don't know it yet because we haven't tried this yet, right? So you haven't seen your numbers yet, right? And that's where, taking your spots and building your 10 trades, right? So doing the same thing over and over and over, and then getting the results of what you're getting. So it's the same system that you're implementing. Okay. The only difference is you're moving it to a lower time frame, right?
Right.
And that's it. So you know that in order to go long, you need the 15-minute to break the positive line, and that's where you would start looking for the entry that you want, right? And then also on the 15-minute when it has a pullback and it retests the positive line, then that's normally your entry, right? So that's the basic And these things can also, you know, be in a situation where you can adjust a little bit of you know, your entry points, right? And that's a different discussion. But here would just be simple. I need my 15 minute to go above the positive line. When it breaks there and retest the line, then I consider that an area that I can go long. The best 15-minute trade is when it breaks the 10 threshold, right? When it breaks the 10 threshold, that is the same rule that we have on the 30-minute. What do we have? When the 30-minute breaks the positive line, we can look long. When it breaks the 10 threshold, that's where we definitely have a better opportunity for an A trade. When it retests, that's our next entry. Right? So that rule that we have for the 30-minute, well, you just take the same rule and move it down to the 15-minute. Okay?
Right. Okay. And then I noticed I was playing with it last night on BitNex and my trading view on different screens on my laptop. That if I'm on the Hikinachi candles, you know, it don't show the reverse, the candles turning red quicker and all that stuff. But that also, if I got on just hollow candles or regular candles, my moons come in faster before they do with the Hikinachi. So therefore, I think I'm entering earlier than I should be.
Yeah,
and because it'll have the reversals, or it'll have the orange line curving back around, or testing the zero line quicker than it does on the Hikinachi candles.
Yeah, the reason why the Hakiashin, like the Hakiashin candles, I use them is because what they do is we call it noise, right? So if you hear a trader say, "Yeah, I use these candles because there's less noise," or "I use this indicator because there's less noise," what it does is it eliminates all the false information that's being the algorithms, and then what it does is basically it takes it to where it's actively moving just off value, right? Like money, right? So that's why when you see when I'm doing that, I'm basically using the Hakinashi candles because I don't want early detections or false indicators into a position, you know, unless it's fully like active.
Right, and that's where I'm using the regular candles or hollow candles that are not that, and I figured that out last night while I was watching and the charts. I'm watching the regular candles because I'm looking at, hey, I'm fixing to start losing money. I'm gonna get out this trade. And then again, you know, if you let them stay on the Hikinashi candles or whatever, then actually it still goes up. So.
Yeah, and that's where and what I'm doing here on TikTok is I'm testing the 15-minute entries here, right? So what we did here, guys, if you're on TikTok, you can see here that what we're talking about is this is our indicator called the moon indicator, right? This is our moon tracker. And if you want to know, it's on TradingView. It's the VC Making Trading Easy Move Volume Tracker, right? And one of our rules of how we trade is that once the money comes in and it's breaking this positive line, we normally want to see it above the 10 threshold, which is here. And then when it retests and goes up, we like to get entries. So what we're talking about here is if it breaks the positive line, it creates an opportunity for a long, right? So I'm going to mark when it breaks here, and then when it retests, and then the re-pullback, and I'm going to break it again. Here it breaks, and then the retest, right? So then I'm going to go up here, and I'm just going to look at on the chart what it actually like created, right? So if you can see here, these arrows were just extended through to the top of these arrows here, and they line up right there. So so that's what I'm saying. So take the system that we have, and then just all you're going to do is just adjust the time frame. So go from the 30, go down to the 15. What you're really doing there is you're just changing your trades from from B trades to C trades, which means they're going to be a little bit less. So as you guys can see here, based on what he's talking about here, what I'm telling him to do is when he sees this 15-minute trade, we're just going to measure these out. This would create a entry off of this particular area here, right? This would be your first entry. And then his next entry would come off of here. And then from there, you can see as the pullback happened, the first pullback trade would have happened here. And then we have the final pullback trade, which would give us an entry here, right? And this is what I'm talking about here. So when you go back, you can, I'm going to take this video, I'm going to make this one actually a high point of the what we're talking about. And I'll record this and I'll put this in the academy or the Making Trading Easy. But what this means here is that these are the opportunities for entries. So when the 15-minute first breaks up positive, right, we have an entry here. Now that entry right there, if it's caught correctly, based on the highest point of this particular trade, which would be this peak right here, we were able to make 7.56%. Massive trade. Okay. Now, on the next trade that it came in, if you caught the next pullback trade, right, and you wait for a pullback and you're patient, then what happens is you end up gaining a 5% trade. Now, remember, guys, we trade these trades based on 40 to 70%. So for every 1%, we get 40 to 70% profits. So on this type of particular trade, since it is like a C trade, we would be looking for, you know, a lower leverage or a higher leverage play, depending on how we're doing it. We'll go through a breakdown of that later. I don't want to go too far into that. But here's the breakdown. So if he's trading here and he's doing his normal, let's just say 50. On the very first trade of 7%, right? If that was a 100x, he would have made 700. So it would be 350% profit. So if he was doing his normal $200, it'd be 246 and 100 bucks. So it'd be $700 on the first trade. This trade here would be 250%, so it'd be $350 on this trade, on a $200 trade. And then you can see, because this is a C trade, when we get to the second row of entries, the third possible pullback, which is the final pullback that we get here, ends up being a very smaller trade, but it is still a 3% trade. Now what that means is, at a 50x leverage, that's still 150% profit. And then our final entry, which is that fourth one, before everything goes any other direction, this is a C trade. You can see that we ended up with a 1.4%. That's that percentage there. So a 50x leverage trade here would be 100%. So this is just working off what we call a 15-minute trade. And I'm going to leave this up because I'm going to make a video for him inside the Academy or the Making Trading Easy Discord, so that he has this video, he can go back and use this as reference into how to be doing his 15-minute trades, right? But this is still based off the rules and the indicator that we use, which is the Making Trading Easy indicator. So if you guys are on TikTok, you can see how that works, right? This volume here, it's not that hard to like understand. This volume here breaks above a certain line of positivity. When it pulls back, this is the main entry that we normally want to focus on, because we like to break the 10 threshold, and then this trade right here is the one that we actually like to get into. And then over here, this last trade that breaks up and then breaks across here, this is the trade that we like to get into, right? So this trade bring 5%, this trade bring 3%. So that's the average of what's called the C trade. And that's also by allowing a system to play out, give you a high percentage opportunity of success, and then taking advantage of that opportunity of success with a certain amount of leverage. This type of leverage would be played at a minimum of 50%, but we would recommend 70x leverage on here, because we're only looking for a 1% move. So we're getting 70% on each of these moves. So if you have a $1,000 trade or a $500 trade, it's 70%. So this is either a $700 profit or $350, right? But I'm going to save this here because I'm going to go back and make a video for our people that are in the Discord. But that is the same rule that we apply to the 30-minute. So it's a 30-minute rule trade right? And it's the same system using the same indicator, but just moving the steps to a 15-minute time frame. And by doing that, that allows you to get into some. These are what we would be considering the best C trades available, because these trades could possibly run into a B trade. But you're also trading with the bounces, the confirmations, and the best way to make these trades, right? Because we still want to be trading on the number one factor in trading is risk management, right? You just don't want to be making trades that could possibly happen. All right, so for instance, if we go back a little bit, and I'll show you here, is that we have a scenario where the 15-minute does break above here, and I'll go ahead and show you kind of like a breakdown of the same thing. So the 15-minute time frame breaks here, and based off of the break, we would be entering a trade here, which would bring us a trade here. And then the pullback, which is what we really wait for, is the break above the 10. And then right here, when it retests and heads back up, somewhere in this zone, right, we would look for the next move here. But we don't get a retest area here, and it just kind of like continues to go down. So we don't get our move. And what I mean is, like, okay, so look at this trade over here. We have a 15-minute break the 10 threshold, which is this perforated line here. You see these little dots here? That's called a 10 threshold line, right? So you see that dotted line starts here at the 10. See, 10, right? So here we can see that we break above the 10 threshold, we come back, and then it bounces off the 10 threshold, which then creates the opportunity for this trade here, which ends up doing like 5%. Here it comes down, goes below, comes back up, breaks the threshold here, comes back down, and then when it re-breaks the threshold, right, you see, it breaks it here, that gives us this final trade that we made, right? And by going back up here, we can see that on that final trade that we made, which is this one right here, we end up getting a 2% move. Now remember, we're doing a 70x leverage, so that would be 140% gains. That make sense? Okay? So that is, the basis of understanding the rules that we follow even on the lower levels. So now if we go here and we implement the same rule, you can see that there's a break through the positive. The trade that we're going to look to enter is going to be a retest here that breaks through, right? That breaks through. It doesn't break through, so we don't get our second trade here. Then it just goes down. Now, I'm going to show you on just the simplicity of having a trade break through the 15-minute positive zone, just so you can understand if you are trading that lower side, that possible trade end up getting a 1% move, right? And that's based off something real simple. That's based off you trading the highest point of this entry, right? Which is this candle here. Let me drop this down. So this is the candle that you would have got alerted on. The highest point of that candle or that pullback would have put you somewhere around this entry point. Then the top of that, or the highest point of this trade that it happened, was there. So when we measure this section between these two white lines, that gives us the probable possibility of this trade, which ends up being a 1% trade. Okay? Now, that's why when you do this trade, we wait for that pullback and then that next move up, because those are the trades that are going to go 2 to 5% versus this being a C trade where the average is 0.5 to 1%. This is understanding risk versus reward, or risk management. This is why we call this a C trade, because the C trades opportunities are a lot lower than waiting for B trades or A trades. And then they put you at risk of losing more than winning, depending on what you're going for. But the key to the success in trading C trades is like how we made that video where we were talking about, in order to win C trades, you had to be in a situation where you get to where you're basically trading knowing that you're going to put yourself in a position of the only thing that you can lose is that 1% move. You see what I'm saying? So you have to take those targets. So you got to take the 0.5% to 1% target. Because if you don't take that percentage target there, you're putting yourself in a position where trying to go for anything more than 1% would be ridiculous. Because the odds are 7 out of 10 against you. So if you didn't take those profits there, you quickly end up on a stop loss or a loss, where you could have made 35% on $1,000, but instead you lose 30% on $1,000. So that's how quick you can go from winning 300 to losing 300. That's why you don't take these particular trades, because they don't have the momentum needed. That's why we call them C trades. And C trades are very, like, you have to be a good trader, but this is like a very disciplined trader. He's a guy who's going to take the profits like 30%. Like when I do these trades, I'm taking 35% profits immediately. I'm doing an 80x leverage, right? I'm trading higher leverage than most people. Sometimes I trade 100x leverage, just to ensure if I only did a 0.5% move, I make 50%. But I take that and I move on, and then I take it again and I move on. I take it every time it comes to me, right? And that's every time the 15-minute breaks above, right? But I'm not expecting it to run, and I don't care if it does run. My job is to make 30% on $1,000 every time. That's it, right? So when it runs, and this is where the mentality goes wrong. The mentality is every once in a while this trade ends up breaking out, right? And it runs crazy for 3, 4, 5%. And then all of a sudden, the only thing people remember is the one time out of 20 that it went for 5%. And so then they start holding this trade every single time, and then they start losing. Because the odds are 8 out of 10 times it's not going to do what it just did, right? Or 1 out of 20 it does it. But that seems to be the only time they remember. And that those traders lose that money because they're not trading systematically. They're trading off of what they saw, right? It becomes like, it's a winging it. You can't wing it. You have to trade the same way over and over. Right? You have to log all your trades. Right? You gotta do a 10 trade review, and then go back and go, okay, man, this trade went for 5%, but the other 19 times it went for an average of 0.5 to 1. So that's called the law of average. You're not going to cheat the law of average, right? That's just the way it is. And that's where people make the mistake. They start trading that one time that went crazy versus the 19 times it didn't. That's why you have to log your trades. Mark MM25 is saying that it's important to log all trades. Absolutely. That's why we have the 10 trade review. That's why when you're in the Discord, we're always like, hey guys, we have our 10 trade reviews in here, right? And the reason why we have 10 trade reviews is so that you can log your 10 trades, because you need to review your 10 trades. You have to be aware of what you're doing, right? That's why we made the video breaking down the basics of the intro of, like, how to use the time frames, right? Then we went into the leverage trading how-to, and it was literally the breakdown. And then the video on million reasons to try the worst trader. The worst trader always comes down to breaking up and doing those 10 trades. And when you break down those 10 trades, that is how you understand what you're doing, right? And it's just and I think I still have the charts in here somewhere. It just comes down to understanding that it's okay to lose 5 out of 10 trades. But if you're doing a system, your system's designed to give you a certain amount of wins, certain amount of profits. So you don't have to worry about a loss. You just have to trade your system. So for you, you just take the 30-minute rule that we have, and all you're going to do is just implement that um, into the 15-minute time zone, right?
Right.
So you're not changing anything that you're doing as far as a rule. You're just changing the time frame rule, right? You're going from
Right.
a 30-minute time frame to 15, right?
Yeah.
And that'll allow you to kind of like, that'll give you a little extra trades that you can look at. And then while you're doing that, like right now we're about to have the 10-minute moon indicator break the positive line, right? So we could go down here, we could say, okay, let's say you're trading and you want to test out, do a thing where you track 10 trades and say, okay, what would happen here if I tracked a breaking of the 10-minute, right? So I'm going to make that trade for you. And now we'll just do a 10-minute break long on this right here. And you have to track the average of what this does. That's why we go back and look, right? Now let me throw my stop loss in there. So I'm going to do a 30% stop loss. I'm going to let that run because I'll come back to it. But so now by changing the process that you're doing, you're still working on the same steps, right? So the steps are real simple. You can't take a long on a trade until the 15-minute breaks that threshold, right? And then if you go to a lower time frame, like the 10-minute, right? The rule would just adjust to this. It wouldn't be the 10-minute breaking the zero line, right? It would be that the 10-minute would have to break the threshold, right? Because it's such a lower time frame that you need it to break that level. And once it breaks that level, right, that's where you consider that longs are now a real possibility. And then when it retests that level and breaks it again, that is where you would be looking to do your long. But by doing that, that allows you to look at a 10-minute time frame, and then you'll see how the 15-minute is reacting with that. But on the 10-minute, use the 10 threshold, because it has to have a certain amount of value. Because the lower you get in time frames, the less orders are being counted for you. So going to a lower time frame, especially when you do long trades, there has to be money, right? And we know that if there's no money inside of a coin, it can't go long. But I mean, right now we see Solana building what we call a cluster, right? You see that cluster on Solana? So we can see a cluster on Solana. That's just consolidation. So we know that Solana here is building up a long right here. That's called a cluster. We know that it's about to go long here, and we could see it building across. It's going to eventually do this, right? And every trader out there has a eyeball to see when it breaks above the last high. And then what they're going to do is they're going to set their orders to buy when it retests the breakout, and then we're going to see a long happen. Okay? That's what most retail investors are going to do. Now for you, you don't have to worry about all that, because what you need to do is you need to wait for the 10-minute to get above the 10 threshold. And then when the 10 threshold, which will probably be the breakout that we'll see that happens on Solana, and then what will happen is when that 10 threshold comes back, because we know it's going to do a second wave, right? Wave 1 up, wave 2 back. If it breaks back to that threshold of the 10-minute and it bounces off of that 10-minute threshold and starts to move up, I guarantee you at that point, if you looked at your 15-minute, you're going to see the 15-minute breaking that positive line.
Right.
Then you know by using the 10-minute that it's bouncing off the 10 threshold, you know that this is an actually strong trade.
Makes sense.
Then you can look at your 15 and go, oh, the 15's breaking, I'm going to enter here. So do you see how we use the different time frames, but we have the rules in place?
Right.
So we're not just changing what we do. We can use it, and we also understand by going to the 15-minute trade with the 30-minute rule and including the 10-minute time frame to give us a heads up of the strength by using the rule, which is the 30-minute moon. Our indicator has to show there's enough money above the threshold, and then show a support on the 10 threshold in order to indicate the strength of the trade. Then we make the trade. Now, is it always going to be a super trade? No, because we already know it's a C trade. So what are we expecting? We're expecting a 1% move, right?
Yep.
So if we're doing a 50x leverage here, we're looking for 35%. If we're doing a 70, right, we're looking for 70% max. And then we take that trade and we go and say, okay, that time frame is done. You see what I'm saying? So the same thing that you just did here on the 10-minute time frame, you would then go, okay, here's what I need to happen now. The next trade that I'm looking for is my original 30-minute trade. So what has to happen? The 15-minute needs to break the 10 threshold, right? When it comes back and it retests the 10 threshold and starts to head up, and then you go look at the 30-minute time frame and you see that it's breaking the 0 line, what do you have?
You have entry then.
Then you have an entry. Then, when the 30-minute breaks the 10 threshold, right, and it comes back and retests and starts to head back up, what do you got?
Yep.
You got another entry.
No, I mean, talking with you today sure helped a lot, you know.
Yeah, that's right.
Understand a little better.
Yeah.
But the moon video helped out a lot the other day when I watched it. Just the only thing that was confusing me was mainly all the different time frames. I was getting confused on. I was thinking there was different rules for different time frames.
No, same rule.
Same rule, we just.
Yeah, the outcomes are different. The only thing that affects the time frame is the amount that you can expect back, right? This is why we don't trade a 10-minute and 5-minute time frame, right? We're not going to do this rule on 5 minutes because the possibility of how much that can give us back. So reward versus risk versus reward. If you're trading a 10-minute time frame, then it's only going to do a 0.25% move to a half a percent. So even if we did 100x, we could get 25 to 50%. But the risk is terrible. So we start with the lowest we go is a 15-minute trade using the 10-minute as a guide to the power of the volume using our moon rule. The moon rule is always the same, right? The moon rule is this. The moon volume has to break above the 10 threshold, right? The 10 threshold right here. Once it does that, that shows strength. So if we're whatever trade you're trading, if we're doing a 15-minute trade, we use the prior time frame, which is 10, to show us above threshold, retest the threshold, and then we trade bouncing off the threshold. So the 10-minute threshold shows us the entry for the 15-minute trade breaking positive. Just like the next trade would be the 30-minute trade. So what we would need, the 15-minute to break the 10 threshold, retest it to show strength, and then we enter the 30-minute breaking the positive trade if the 15-minute is showing it's moving up after breaking the 10 threshold. That make sense?
Yeah.
So it's the same rule, same move over and over and over, but we only go down to a 15-minute trade. The smallest time frame we use to understand what's happening is the 10.
Right. No, it's making sense now.
Yeah. So that's where we sit there and we put that all together. So that's the power of having a systematic trading system, and then that's why we created and we made the moon trading value. This is why we made this indicator. All right, so the making trading moon value tracker. So guys, this is on TradingView. This is the indicator that we use for everything. It's our indicator that we made because it's built for the system that we use. And the system is this: money. If there's no volume, right, there's no money. All right, there's the indicator right there. VCMTE moon value tracker. Right? If there's no money, then a coin can't go up. Right?
Right.
And that's just the way it is. So if it doesn't break this 10 threshold right here, right, if it doesn't come above this line, then we know there's no money, right? So as we're looking around here, we can simply go, okay, when that all happens, which is coming, right, I guarantee you, as we come back to this video, we'll see the 10 break the threshold, right? This will break above the current cluster, which is just what they call a parallel channel. It'll break above the current cluster. When it breaks above the cluster, it will then break above the threshold. It will then come back down and retest. If it doesn't retest and it keeps going down, guess what? Then it's a short, right? Or, depending on where you're at, that means that your entry is going to be lower, meaning you're going to get a better entry price on Solana somewhere down here. And then it's going to try to build up again, right? And then we're going to see it build up again. And what we're waiting for is it to break the threshold, again, wherever it comes down to. When it breaks it again, then we know that we're in a position where their long is actually possible. If there is no money, there is no entry. And that's pretty much it. But that's why we have this indicator, is because I don't need to worry about finding a parallel channel. It's nice to sit there and watch the chart and I can see that it's coming. And now that I know that it's coming, I can go, okay, where's my 10 minute? So now I'm just going to sit here and I'm going to watch the 10 minute break above the threshold, retest, and then I'm going to take my entry on the retest and the 15 minute breaking above the positive. And that's going to be there. And I know that at that point, I have a strong C trade that could go B. So I can look for a move that is going to possibly stay strong enough to go to 3 to 5%. See what I'm saying?
Yeah.
But that's why you have to be in the right trades in order to get the gains that you want, right? You gotta. These are the what we talk about is the person making the trade is responsible for the possibilities. So if you make the right trade and you're doing the right trade at the right time, or at least the right expected trade, and yes guys, Solana's going to go long here, is that you're making a trade based off of a system. And if you're just doing this over and over, right, you're going to your 10 trades, even if you lose half of your trades, right? Remember, we're not worried about a good trader. We're worried about the worst trader. So guys, if you're interested in the indicators, right, this is the indicator right here. Let me see my indicators. So you'd come down here. That's the indicators right there. So if you want to take a screenshot right there, you can. So this particular one is called the Moon Volume Tracker, right? It's the only one we really use to make trades. Now we do have, and this is just VC making trading easy. We do have price action traders. These are buy signals, right? That's another system that we teach inside of Academy. But on this system here that we're teaching, we're just using the Moon Volume Tracker, right? Because the system that I'm teaching now is called Making Trading Easy. And the reason why we're teaching it the way we're teaching it is because we want this to be a non-complicated decision, right? Where you don't have to look at so many moving parts to make a decision. You simply use an indicator, right? See how the 10 minute just broke? You simply use an indicator that shows you when the possibility and the average is in your favor for a long, right? Then you can make the best longs possible and put the percentages of winning in your favor. So if you can win 5 out of 10 of the trades using a strategy that we have, which is very simple, 500 to 1,000. So think about this, right? You have a $1,000 trade. Every trade that you do, right, is based on a leverage of 50% X. So you need to make 30% per trade, which means you need a 0.5 to 0.75% move up. You set your take profit at 30%, your stop loss at 30%, right? Now, as you move along these, you're entering a very specific trade, and you're hitting that. So for us, we're actually looking on these trades to go about 60% on each of these trades. So this is why we're trading what they call A trades versus, this is a C trade right now. This hasn't fully developed, but on our trades, we trade a 30-minute time frame looking for 60%, which means we're looking for a 60x leverage, 40x leverage, and we're looking for a 1.5%, 2% move to give us 60% gains. Our losses are 30%. So if you lose half your trades, you're basically doubling up on your bag. So if you have $1,000, every 10 trades you make $1,000. You do 20 trades a month, $2,000, $24,000 a year. It's simple to do, simple to follow. No, you don't need to know anything about trading to do this. It's one indicator, one system, one rule, and you just follow the same rule over and over and over. So that's what making trading easy is. It's not having to understand anything. Now we do incorporate showing you guys Fibonacci's so that you can understand where support lines, like for instance here, right? Let me throw in the Fibonacci's here. We do show when we teach, we talk about Fibonacci's, just so you can understand where retail investors are thinking about areas of support and resistance, what they mean, etc., etc. And then we also teach you the concept of the Elliott waves, right? So that you understand that wave 1 is the first wave up. There's always wave 2, which is a 50 to 70% pullback, and wave 3 is your most profitable wave, right? And when you understand all these things, at least you know what's happening, why they're happening. But at the end of the day, if you're just following very simply this, our wave 1 is when the 10-minute breaks above the 10 threshold. Wave 2 is when it comes back and it retests the threshold. Wave 3 is when it bounces up and starts to head back above the 10 threshold. And that is the Elliott waves prior to them actually being printed, so that you know what's happening before it happens. All right. So if that makes sense, guys, hit ones in the chat, guys, if that makes sense. And if you guys are interested in understanding this, if you guys don't see the indicator inside of the Trading View, send me a Gmail. It is vccryptonation@gmail. So the name of the channel, vccryptonation@gmail.com. Right? Or go to, I'll leave it in the comments here, guys. You can go here. Reply to Cedric, VC Crypto Nation. This is where you can go watch. There's a welcome video. Go there and watch the welcome video, guys. Same name as the channel. Right. Go check out the welcome video. It explains how to get everything you're looking for. But yeah. So we explained the Fibonacci's. We explained, like I said, guys, this is all for educational purposes. Understanding. My entire thing is trying to figure out, how a systematic system in crypto makes so much money, but why the individual has an issue with executing, right? Because what this all comes down is to executing your trades, and that's it. I mean, so following a system, using one indicator that guides you through everything you need to do, and then understanding why or what everyone else is waiting to happen, and then how your indicator tells you that it's time to follow the people that are making the trades. And that's pretty much it, man. It's a very simple thing, man. So did that help you out, brother? Make more sense now?
Yeah, it's making a lot more sense.
Yeah. So that's the way to.
I ain't get to watch it like on Kicker, because I'm driving.
Yeah. No. But you already watched the videos. You know the 30-minute rule. That's how you move it to the 15-minute, and then use the 10-minute to guide you to the 15-minute.
Yeah, I was just under the assumption that there was different rules for every different time frame, and just cleared it up for me.
No. Yeah, and we don't want to be on. Like I said, the lowest time frame we want to trade is 15-minute, and we can use the 10-minute as a guide to what's coming to the 15. Right? But it's the same steps. We need to break a 10 threshold. The 10 threshold has to show the support, and the next time we break above the 10 threshold is where we make our money.
Right.
So it's the same. We repeat the same system over and over. It's just 15, 30, 45, 1 hour. They're all the same.
Right.
It's just as you move up time frames, the payoff is bigger. That's why the A trade that we do, or more like the B trade into the A trade. So the A trade is the 4 hour trade. So when the 4 hour does what it's supposed to do, we have our biggest trades. That's our
Right.
A trade. That's the master trade. That's the one we put, big bucks in, take home big bucks, and call it a day. The B trade, which is the 30-minute trade, that leads into an A trade 3 out of 10 times, where we can see massive gains from 3 to 10%, right? But still, sitting there in a B trade that's bringing in 100 to 150% per trade on $1,000. It's $1,500. Let's say $1,000 a trade. You're doing 4 of those or 5 of those a week.
Right.
You don't
Yeah,
need, you don't need much more than that. That's
Yeah, I
pretty basic.
start following the system. I should do 100% better.
Yeah. So that's why I wanted to get you on the phone. I know you're on taking a 6-hour road trip. I just wanted to get you on the line because I'm like, I didn't realize, I didn't realize how many different things you were doing, brother.
Oh yeah.
Yeah.
Trying to follow different people throughout the year, I guess, and then finally getting with you and trying to get with a system, but it seems that I'm overthinking, put it that way, because I'm always taking bits and pieces from what I've heard from other people and
Right.
throwing them together and not just letting it go and just trying to go with the flow with your system. Just overthinking it, so I think is what I'm doing.
Yeah, and you know what you can do. So the reason why we have this system called the Making Trading Easy system is because you can use all these other people's ideals on trading, but this will make it so you understand how to use their system, right?
Right, but I just need to get down one system.
Yeah, this is your
First.
safety system. This system allows you to understand when someone is saying something's going to happen. This will clarify whether or not it will happen. Because you got to always put in your mind 50% of the time what they're telling you won't happen.
Right.
So that's just normal. So now that you know that, you need to be able to have a steps that protect you from getting into things that aren't going to happen, right? And then when to know that the 5 out of 10 times it's going to happen, how to see that when you use the indicator that this is one of the best times that this possibly could happen. Now you've eliminated 50% of the losses, and now you're focusing on, now you're giving yourself a 50% better chance of being in the right trade at the right time. You see what I'm saying?
Right. Yep.
And that way, it's easy to go, okay, now that I've eliminated 5 out of 10 times that they're wrong, now I'm working in the smaller window of possibilities. So now even if I lose half of these, my wins are going to be definitely half of these. So if I can position myself to win 60% 5 times and only lose 30% 5 times, I will have doubled my money.
Right. Yep.
And that's me being the worst trader possible.
Sam showed been the worst student as possible.
Yeah. But this is what it's all about. You're not, the thing is like, to you, you're thinking like, man, I'm having, I've learned from all these other people over the last year, 2 years. I've tried so many techniques. I've done so many things. And really, you just have a shitload of bad habits. And
Yes.
because
Their system works for them, but they know it. It's like your system. You know it by the back of your hand.
Mhm.
I don't know. I'm still learning the system, but I got to start the set down and process and go from give the system a chance to work and go use that system from start to finish. If it don't work, don't take the trade.
And this is where you have to. So the system. So my system is the academy system, right? The academy system is 20 different trades, multi-level of leverage, and all types of moving parts. Okay. The Making Trading Easy system. This is the worst student system. This is where we put in very, very few trades, like literally just one, and we break it down and try to explain when you should see this trade coming and how to enter it, right? For someone who's absolutely terrible, right? So that's why when that's why I get the students on the phone and I have the talks, is because I have to understand where you're messing up, and that's why you'll see me remove things and then make it even easier. So right here, you remember in the beginning, 4 or 5 weeks, 6 weeks ago, we were talking about the RSI, right?
Right.
So notice I've removed the RSI.
Right.
Because really the RSI, the stochastic RSI, was something we talked for people that were doing hodling on when the best time to buy and best time to sell. It's not as good as our moon indicator, but it gives them it's within 30% of the probability, which isn't bad because you're not using any leverage and you're just holding anyway. So your risk to reward is very limited, right? But then what I realized is by having that one step where you're looking at the RSI instead of the moon indicator, you're actually getting bad information when you're using high leverage. That's why I removed the RSI.
Right.
And now we're
I noticed the RSI be down at the bottom, stuck at the bottom, and then the moon indicators, everything's on the volumes all the way to the top. Well, I don't know if I want to start getting a trade there or not.
Right. That's why we removed the RSI, is because it was an extra step that, in the mind of people who are just making a very simple trade, could confuse them. That's why the Making Trading Easy system, is we evolve it all the time based on feedback of that week, that market, right? It's always based on what's happening. And then that way, when we have steps that we can follow in whatever market we're in, right, we're successful. That's why we have the 30-minute rule.
Yeah, I made lots of sense today.
Yeah. So I removed the RSI because that was a step you didn't need. You only need the moon indicator, and then all you have to understand is that what volume on what time frame matters, and then give you the highest percentage of possibly winning trades. So then if you're just trading C trades that could be B's and B's that could be A's, then you're trading the best possible trade out of each class, which will give you a higher percentage of winning. And if you can win 50% of those trades, then you can double your bag every 10 trades.
Right.
And that is it.
Yep.
Oh, let me invite my boy up here. But that's where we really want to focus is get MIM, what's up, brother? That's where we want to get you to where you're like simply understanding the best time to make a trade, and also knowing it's okay to lose 50%, because if you're using a system where you're using the same bag, and if you're losing 30 but winning 60, at the end of 10 trades you've doubled your bag. Right? And that's just simplicity. This is the worst possible trader, the worst student, not adding anything, not doing anything extra, being the worst possible trader in the world, and you are still doubling your money every 10 trades, and you're making 24 grand a month, or 24,000 a year, being terrible.
Right.
That's it.
Yeah, because at this rate, I'm giving 24,000 a year.
Right. And we're gonna change that. Now, I mean, because I didn't realize, but you can see, but this is where these are the things where once you make these adjustments over the next couple weeks, the videos of you changing and explaining, hey man, here's what I used to do, right? Because once I can fix what you're doing wrong, there's a million people just like you, bro, doing the same shit.
Oh yeah.
Right.
I'm sure it's all new users not knowing.
Well, because
sticking to a system is going to be a start in the right direction.
Yeah. Well, that's the problem, is that everybody creates a trading system. But what they do is they don't understand that everyone else can't do the same system. So what we're doing at Making Trading Easy is I'm finding out what you're doing wrong, and then I'm just giving you a systematic way to stop doing what you're doing wrong.
Right.
So if I can stop you from doing your bad habits, we can get you to where you can double your bag every 10 trades. And then once you do that, you'll start to understand like, oh, and then you can increase that 10 different ways to make that even more.
Yeah, and when I call them OGs, when OGs come into the Discord, give us little tips and tricks or whatever, I take that to heart. I try to implement that in with everything that I've been with my bad habits, trying to make me better.
Yeah, and sometimes I love when the OGs come in because part of the academy was, you learn how to trade, and then you go and you basically, as we grow the academy and all that, it would just be paying it forward. You're constantly helping people get better, and a lot of times they'll give advice and talk about things, and then the guys are like, man, and it's like on different time frames and different types of trades, and that's why we appreciate it, because it's like it allows us to get into a situation where we're figuring out what's wrong with how it's always the person, right? And so instead of making a trading system that was built, so my original trading system is built off fundamental trading, meaning the Richard Wyckoff system, market maker trading, and it's based off of taking advantage of retail investors and the movement of the markets. And what I realized that there's so much moving parts there that the retail investors, the reason why they can't learn is because they don't understand what we're doing. So that's why I shut the academy and I started the new Discord where it's free to come in and talk and get into the system, is because I need information from the bad traders so that I can create the Making Trading Easy system so that it's plug and play. So the worst person in the world who just and it's not even being a bad trader, it's just the fact that you're learning mathematics from 1,700 different people, right? So you ever see the Chinese do math, and you're like, wow. Yeah, look that up. Look up Chinese mathematics, right? And you'll be sitting around going, wow, they really suck at teaching us. That the U.S. is terrible. I mean, the way they do their division and everything, it's like, wow, that was easy. Like, so there's all types of ways to get an answer in mathematics and equations. And sometimes other people just, sometimes you come across a better movement. So that's why in the Making Trading Easy, I'm asking, how you guys, how you think or what you're doing, because I need to understand what you're doing so that I can make the rules and things that help you get to a better place as far as like making a good trade, right? So these conversations are great. That's why I started off. So the very first trade we started off was called the master trade, 4-hour master trade. Very easy, right? But it was an older time frame. It took a while for it to come around. And then I realized that people who are bad traders are impulsive. And they need to trade more. And that's why after a couple weeks, I went down and I said the 1-hour trade. And I realized that trade was too hard to execute because there was too many steps to follow. Then that's where I was like, you know what? We're just going to use the moon indicator. We're going to get rid of the RSI. We're going to go to the moon indicator, and the only thing that matters is money. So the only thing that matters is when that orange line, you see how we're breaking positive now, guys? You guys can see right here, we're breaking positive. So now that we're breaking positive, we know that we're getting into long movements here, right? You can see Solana, look at it move up. And so what I did was I said, you know what? Forget the extra step of having an RSI. Let's just go with the money. Because at the end of the day, the one thing I always say is money is king, right? Volume is king. So that's the only thing that matters. So this is why I got just the moon indicator. So, we're going to use our main indicator to do all the trades and why we do trades and the rules of a trade. So now I can create a 30-minute rule that just allows us to make a very simple trade that's a B to A trade that gives us an average percentage in wins of 8 out of 10 times every single time. And if you fuck that up, that means you will win 5 out of 10, which is being the worst trader ever, and you're still profitable because the gains are 60% and the losses are 30%. So Now that we have that in place, you can't really fuck that up. So now you can take that and move it down. What we went over today was moving it to the 15-minute, but showing you using the same rule just on a different time frame, and then using the prior time frame on how to see that it's starting to develop. So now trading this way, you have very simple steps to follow that you can't fuck up. And then now you have to do is make the right trade, which is the right amount of money, right?
Yeah.
Wisdom. Hold up, man. Wisdom, what up, bro? Damn. Wisdom's in the house. Don't forget to share the live, guys. Share the live, man. Shout out to Wisdom, bro. I ain't seen you in a minute, dog. Woo. All right, so I'm back live. I try to go live. It's just, right now I got, it's summer. It's family time. Kids are going back to school. Nieces, nephews, all types of shit. So I try to do as much as I can, and I travel a lot. So, I'm trying to get into a zone where I can do more lives with you guys and try to get you in there. Good to see you, Wisdom. I appreciate you, bro. But now we have a system to where now that I kind of understand what you're doing wrong, and it was like just the decisions that were being made, I can now add to the system fail safes, things that you can understand and follow, and then you don't have to be guessing. You don't have to be winging it. You don't have to be hoping. You know what I'm saying? You can actually you can understand why you win and why you lose. And then you can see the amounts that you win and the amounts that you lose. And then when you understand, if I'm winning 50% of the time, I'm winning 60, losing 30, I'm up 100%. So if I have $1,000 trade and I make this all the time, then at the end of it, every 10 trades, I make $1,000. So if I do 10 trades a week, $1,000, right? That's it's educational purposes that just understand risk management, right? Because that's really what it was. That's why I was doing the research of how many people fail at trading. And then now with AI, they explain to me all the reasons why people fail at trading. So now I can look at that and go, okay, if I take the rules of why people are failing at trading, and then I put them in a situation where I go, okay, here's the reasons why people fail. And it comes down to emotional trading, which we address. It comes down to lack of risk management, which we address. But, the emotional side, when you really think about it and you talk to people, it's like sometimes like you didn't realize you were trading emotionally, which you don't really trade emotionally. But when you had bad entries, you would close and re-enter because you didn't think it was a good entry, right? So it's like a little fear of like, okay, that won't be good enough for me. My stop loss might hit, right? So you kind of had an emotional trading situation that you didn't even realize you had.
Right.
Right?
I'm backed off of that. So I'm eased out of that. Some of that.
Yeah. And then, just lack of risk management. So these are the reasons why, and then understanding that people can actually lose 7 out of 10 trades and be more profitable than somebody who wins 6 out of 10, right? And that's why I was trying to break it all down, and I was thinking to myself all right, so why, right? What's the why to this, right? And what I realized, that's why I told you, we started off and we're like, yeah, most people, because I was doing systems where you could take $50, turn it into 5,000, but that's highly disciplined trading.
Right.
And then I realized that the reason why people overtrade is because when they do make trades, it's not enough money. So they're like, man, so when you win $30 and $30, and you're like, damn, I'm up 100. But then you're thinking to yourself, man, imagine if that was $300 a trade, I'd be up 1,000. So you talk to yourself and you just get too excited or too greedy where you're like, you know what? I'm going for the big trade. And then you get into the first big trade, and what happens is it goes down 10% and you're down $150 and you're like, oh, fuck that, I got to close. That shit's crazy. But you didn't even let the trade go through. You just, right, without knowing that once you enter the trade, you are risking 20% of a stop loss no matter what happens, and your goal is to get your 60% the other direction no matter what happens. And if you got into a trade where you panicked and had to close because you didn't know what was going to happen, then you are not in the right trade.
Right.
You're not trading systematic. You're just, and that's how you panic trade. right? But if once you have that set up to like, okay, I'm going to do 10 trades, all for $1,000 each, and I'm going to either lose 25% on each trade or win 50% on each trade. But I'm going to trade a system. I'm going to follow the system. Here's how I enter. Here's when I enter. Here's what I do. And you just let it play the fuck out. And at the end of 10 trades, you go back and go, okay, I lost half of those, but I won half. So I'm up 100%. Most people never get to that because they're like in and out, in and out, in and out. And then they're like, they'll have a big win, which means nothing because they've already fucked their profits off by going in and out 5 times.
Yep.
And then at the end, they're like, damn, I did 10 trades, but I'm down 100. Like, huh? But you want to, it's like, but the averages aren't correct because they didn't have a system they were following. They were putting in different amounts, trading different amounts, upping different amounts. Stop losses were different. Trade entries were different. That's not systematic trading, right?
Right.
So you have to have a system. You have to follow the system. That's just the way it is. And then when you get the results, you have the data. When you have the data, you know what you won or what you lost, right? And then we can fix those going from there because we know how to do that. But we got to get the information first. But that's the key is most people fail because they don't have a system and then they don't follow the rules of trading. So that's why Making Trading Easy, we made those 4 or 5 videos because it's like, listen, every time you trade, it's going to be the same amount. You're either going to trade $300, $500, or $1,000 on every trade. Your target is going to be 50 to 60%. You're going to use a leverage that's 50 to 60x leverage every single time. Your stop loss is going to be 25 to 30%. And this is what you're going to do every damn time.
Yep.
And you don't change that for 10 trades. And at the end of the 10 trades, let's see where we're at. So we like it to have where you're doing a 60 to 70% X leverage, right? I think it was, the breakdown was, 70. I gotta go look at the video, but for the students, it was like 70%, and then a 0.5% pullback, which would be the 30% stop loss. So you're going for 60% gains, which is a 0.75% move up, right? So in between a 0.5% and a 1%. So you're going for the 75% mark, 0.75% up. Your down is 0.445% down, right? Because you're looking at a 30% stop loss. And that's it. And out of those 10 trades on the 300, 500, or 1,000, you're either winning or losing. And that's all. But if you follow the system, you will win more than you lose. 100%. Like, that's guaranteed. I'm watching your... I'm doing your little 15-minute trade now. So we're getting the 10 minutes about to break the 10 threshold here in a second. So
I'm just looking at the trade view on my phone.
Yeah. So once we get this to break through here, then we'll have you'll see Solana will break the support or resistance area that it has here. So you see that. So that'll break. Once that breaks up, then we'll have the pullback of the 10-minute back to the threshold. And then that's where we will get our entry. And then that would be the 15-minute breaking the zero. There it is. See how the 15-minute? You guys see that right there? You see the 15-minute moon? See it right there? See how it's about to break the zero? So this right here would be indicating that we'll be taking a long position here. So an entry based on the top of this. So this will break 28.38 or 238.60. This is going to break up. So it's when you have a system, it's easy to understand what's happening. And then what's our saying? If we know what a trade is going to do or supposed to do, when you know what a trade is supposed to do. Tally, what's up, VC? You got to watch them new videos, Tally. We're making it, and after talking to you, talking to Matt, we're getting a very simple, structure here for the making trading easy people. But the saying is this, guys: when you know what a trade is supposed to do, right? When you know what it's supposed to do, when it doesn't do what it's supposed to do, then we know what it will do. So this trade is setting up here to where it should break above this resistance line. Then it should retest the breakout. Then what it should do from there is go long on the next move. So we know that that's what it's supposed to do. So that's everything it's supposed to do right there. If it does anything different than what it's supposed to do, then we know that we have an opposite trade, mean a short. So right now, we're seeing the 15-minute get to the 0 line, right? You see that down here, right?
Yep.
That should break through there, which would be consistent of an entry once this candle is above this 0 line. Then we should have a long position somewhere in there. Then we'll have a pullback, which will happen where we get a pullback on a 2 wave or whatever. If you're an Elliott wave person, and then from that pullback, whatever that pullback is, then we should see a bigger move. Now, what we need to verify this or confirm this is we need the 10-minute, and I'm going to show you guys here. We need the 10-minute volume right here to break above the green perforated line right there. Now, if this gets to the line, right, if it gets up to this line and it rejects, right, for whatever reason, if it says, you know what, rejection time, then we know that we're going to have another pullback, and we will be looking for this to repeat its actions. Now, if it breaks past the 0 line right here, which is the yellow line, then we know that we have a different type of trade where we have another pullback, right? We don't have a long, we have a short position going in here. And then we know that the place that it should go, which is somewhere around here, if it does pull back, 235.69. Now, if you're a better trader, right, or a more seasoned trader, we would be looking for an entry here off of this Fibonacci. Now, I'm not even going to look what Fibonacci this is, but I guarantee you that the lowest level or the highest level of this Fibonacci is probably the 786. I'm going to open this up here so we can see the chart. I'm going to come back and I'm going to look for my 786. There you go. So here's my 786, which happens to be the lowest level of this support area, 786. Now, just so you guys know, the 786 is the hardest Fibonacci to break, whether it's resistance or support. Now, we would be looking back, if this fails to go the other direction, we would put an entry at the 618 at the 236 level. And that's where we would be thinking to ourselves that the short position would come back down to here. This would give us the best entry point. We would then measure from the 786 to that level, right? And we can see that that level is a 0.19% pullback. So if I was doing a 70x leverage, that means that this would be consistent with a 17% pullback. So that means that my trade would have a support of the 786 as a 20% stop loss pullback, and would put my 30% stop loss somewhere in the lowest position here, and I'll make this red. And you can see that that would be my worst case scenario down here, which was actually the last wick. So the probability of that actually happening is very, very low. So if I put a 236 entry here, 70x leverage, I'm pretty sure that I could get in here and get into one of the lowest entry positions on this trade and be in a really good position. That's for my more educated traders, better traders, guys who are, understand their risk management and all that good shit. But for students, right, you don't have to know all that. All you need to do is, you've never traded a day in your life, you've never done anything, or you're learning how. You just watch the moon indicator break above. It doesn't matter if it rejects here, right? All it does if it rejects is your entry would then move down here, and we'd be in the same scenario. We're still waiting for it to bounce, break above the 10 line, and then once it retests down here somewhere, this is our new long position. So it doesn't matter if this trade hits the top of this wall, comes back down, and then finally breaks out over here. We don't care, right? But knowing the steps that make the long happen allow you not to be caught in the up and down movement of this area here, which could cause you to get bad entries, get stopped out, enter again, get stopped out, then get caught in a downward movement without understanding where your protection is, etc., etc. There's a lot of things that can go wrong for a new trader in this area here if they don't have a system they're following. So that's why we have the indicator here called the Making Trading Easy Moon Tracker. It tells you what's going to happen or when it's happening, so you don't have to be that good of a trader. That makes sense? And if you're a good trader, I don't have to watch this damn chart for 4 hours like it seems like we're making. And I can just make my trades based off the indicator, right? I don't have to figure out anything. I got my volume. It is what it is, guys. That's how easy it is to make that trade. So that makes sense. If you guys are on TikTok, if that makes sense, hit ones in the chat. Does that make sense? Right?
Yeah.
Yeah, simple. You know, hit the like button, guys. Don't forget to hit the like. Share the live if you're in here. Share the live so we get more people in here. But that's the simple concept, man. You don't have to, think about what's going to happen when you know what's going to happen. Right? Now all that has to happen is you just got to let it play out. So I don't have to jump this long here and say, oh, it's a long because I see this value. This could be just a fake out. It still has to break above, come back, retest, and then go for a run. So either way, I'm not in a hurry. I'm not making a C trade effort. I'm not making a bad trade because we all know that we need one thing to happen. What do we need to happen? This right here, this line in the middle, this green perforated line is what's called a 10 line or a threshold at 10. Now it's turning green. That's an entry, right? You see how that turned green right there? That's flickering green. That on my indicator is letting me know that I can enter at 238.55 area. All right, so that's telling me that this is an entry, and now we're getting enough volume that any type of movement here we're going to be decent. But we're going to let it play out because it's letting me know it's heating up. So what do we need? We need it to do this very simple thing. So let's not get excited. We need it to break that line right there. When it breaks that line, that is where we say, oh, okay, longs are possible. Then we need it to pull back. When it pulls back, right, when it starts to head back up in the direction again of up, this area here, and it retests, this is our entry. Right? So if you're a new trader, a trader that doesn't have a good success in trading, right, and you want to see more wins, less losses, this is your entry when it starts to head back up. There you go. And that's all we're waiting on. So you don't have to be impulsed, emotional, jump a trade, take a risk. You got a risk reward. Risk management is the highest thing that you can do. So that's pretty much all we do. So we just really, the only thing we need to do if we're in the Making Trading Easy Discord is we just literally watch our moon indicator. And when it does what it's supposed to do, we don't have to watch any other chart. We just watch this thing here. When it breaks above and comes back, we enter. There we go. I don't need to know anything else. I don't need to see candles. I don't need to see anything else. It is really that simple. And that's why we call it Making Trading Easy, guys. If you're interested in any of this information or the videos on where to find them, you can go. I'll put it in the comments, guys. Um, it's the same thing. VC Crypto Nation. The main website is the same thing. You can hit the link. There's a thing in my bio. Go hit the thing in the bio. Very simple information, guys. Easy to follow, easy to do, right? And the rest of it is just being patient to let it happen. So when this breaks above, it comes back down. I'm gonna come back to this little area here, and we're gonna see what it does after it breaks up and it follows the rules, right? Once it follows the rules, right, which means is break above the green line, come back down and retest, and then start to go up. When that happens, we have a long position. That's our long position when that happens. If that doesn't happen and it starts to go down, guess what? We're in a short position. That is how easy this is. There's really nothing else to it. Let me see here. Always. So the question, so is the pullback a certainty? So yes, right? And so Mark, have you ever heard of you heard of Elliott waves, right? You guys heard of Elliott waves, right?
Yeah, I like Elliott waves myself.
Okay.
I just want to know when they're coming.
Well, yeah. The thing about Elliott waves, guys, the reason why we talk about the Elliott waves is because it is a trading certainty that happens based on retail investors, right? VC Crypto. Okay. So the reason, and remember, you're trading with retail investors, okay? So retail investors are always going to trade off whatever they learned on TikTok, right? And most of the time, TikTok is going to be, and if you need any more information, right, there you go, VC Crypto Nation always. So the certainty is this. So once you learn about what they call the pullback, right? So Elliott waves have a very simple system. Let me see if I can pull this up. Where the student. All right, student information. Here we go, trades. Okay, let me slide up to the top. So this is basically right here. So these are Elliott waves, right? So Elliott waves have a wave 1, which is a bounce. The wave 2 is always the pullback into the buy zone. And then wave 3 is normally your biggest wave, okay? Now the reason why the pullback is always, going to happen is simply because the way the trading style is designed is that once a trade reaches a certain level of profits, especially in a C trade or low value market, which we are in, there always a pullback because smart traders or the 5% of traders know that there's not enough volume or money to continue up. So what they do is they sell when they hit their 30% target because they're disciplined. The reason why the 1 to 5% traders make more money with less trades is because they're just simply disciplined. When that moves up, they have to take their trades, okay? They got to take profits. So they take profits, which then make a pullback, and then people panic sell and go, oh, it's going the wrong way, and then you see that pullback. Now, a wave 2, right? The wave 2 is fundamental that it normally will pull back 50% to 70%. Why? Because depending on the time frame and the trade that you're in, right? That's why I say there's B trades, C trades, B trades, and A trades. When you're in C trades, the pullbacks are always, more like 70 to 90. right? Because there's less volume, which means there's less money to hold the floor or to keep to keep it going up. Now, as you move time frames to better time frames, right? As you go from a 10 time frame to a start trading different time frames, what happens is the pullbacks become lower, right? Instead of 80%, 70, they're like 60, 50, 40, because higher time frames have more volume. So more volume means that it holds the floor and more people are buying in, right? Because more people so how to say this, more patient and winning traders don't overtrade. They trade higher time frames because those time frames are worth more money. So they don't overtrade, they wait for the trade to develop, right? So there's always pullback, especially on these lower moves or lower time frames, because people have to sell for profits. So when you're a disciplined trader, you take profits every 30 to 40% no matter what, until the volume develops to where it becomes a bigger volume, right? The higher the volume, the bigger the moves. Then you go from 30% trades to 60 to 90 to 120% trades, right? Because you know the money's there. Once the money shows up, you can extend your trade. That makes sense, Mark? But this is always based also on principles, right? So that's why you also see Fibonacci. So there's a Fibonacci zone. There's a thing called the golden pocket, right? When it gets inside the golden pocket, that's normally when the volume is at a certain level. And then everyone knows from the golden pocket, we're going to go to the 786. Once you break the 786, then you're going to move up the next two time frames, up to the 0 or the 1. So this is why these pullbacks are inevitable. It's simply because you're dealing with, especially in crypto, you're dealing with 90% of the traders are retail investors. There's not a lot of institutional investors inside of crypto yet. Now, that's why we tell you that the best time to make money in crypto is going to be now for the next 3 to 5 years, because once the institutional investors come, and there's only so many cryptos they trade, there'll be like maybe 50 to 100. It'll just be what they're trading. And then what they're going to do is they're going to initialize stocks into crypto coins. So you'll be trading Pepsi as a crypto coin. It'll be an institutional traders trading it, and you won't see these magnificent, 3 to 15 to 20% moves. It'll be 1 to 2%. That'll be the greatest thing you'll see, because institutional money stabilizes the market. What's up, sexy? And yeah, sorry, my wife ruined my train of thought. But that's why being in the market right now is like, the best time. But you see here, guys, even though we're getting a green bar, it's flexing that the volume is picking up. But notice that we're going sideways, right? Which means we're going to get some type of, slowly, might be a little bit of a pullback, and then it'll break up. But like I said, this is the 10-minute time frame. So no matter what, we still need it to go above, come back and retest, whatever the retest is, whatever it pulls back. And then when it starts up again, that is our entry, right? And that moves us over to the 15-minute time frame, which looks like this. So you can see the 15-minute is going up. Now, if the 15-minute comes back and it retests the positive line, right? Right? If it retests the positive line, then we say, oh, here's our possibility for an entry right here off of the 15-minute positive line going back up. So that's what we're waiting for here, guys. So if you guys want to understand what this is, we do a lot more talking inside of Discords and stuff like that, but all the information you need is right here. Just check that out, and everything is just educational side. So when you're going around their welcome information, all that stuff, just go there, hit your welcome information, and yeah, it's pretty basic, guys. So if you want any questions on the indicators, anything like that, that there as well. Go watch the videos that we just posted. Make sure you like, comment, share the videos. So the algorithm, remember TikTok is an algorithm. You got to like, comment, put 5 words or something like, great seeing you in live today, VC. I learned a lot today, VC, blah, 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 whatever. Do 5 words, hit like, share a couple videos, and then that way when I do go live, you will get notifications because the algorithm thinks that you want to know when I'm live. Right? You gotta tell the algorithm what you want. Very simple. But yeah, guys, that's the breakdown of and there's a bunch of videos you can go watch. The videos, simple things, the videos that I watch are like, we watch a lot of videos, student videos. So these are the videos that I like to watch here. Student videos, the basics, the intros, stuff like that. You just want to do your research, like how to use time frames, how to use leverage trading is in there. Making trading easy system, millionaire reasons, right? Worst trader. And that really comes down to, you can see here, we've got all the statistics on why we built our system, and why the way we built it is because we understand 90% of traders lose, and why they're losing, the reasons why they're losing, how they're losing, and then we're just fixing those issues. How to use the moon lines, and then there's the moon rules, right? And then then we could see these are the trades that just happened this last week. So all that stuff, we cover everything for you guys. We keep it real simple. You can go in there, ask any questions, right? Right here, brother. So Mark, go right here. Screenshot that, guys. Go right there. Everything you need is right there. 80! Adi, what up, baby? Screenshot that, guys. Everything you need to know is going to be right there. Everything we talk about is going to be right there. Simple. And then, when you're in there, so that'll get in there. So, Matt, that work out for you, brother, to help you out?
Yeah, it helped me out a lot.
So now you can that's why I wanted to get you on the phone, because I wanted to understand what you were, Hannah, what up, Hannah? Wanted to figure out because I know you were asking questions about rules, time frames. I'm like, all right, let me figure out what exactly you're asking me. So that way I can, we can do the videos. Yeah. So now I'll go back and I'll make a video just based on what we talked about today, so that you can understand the time frames, and that was the same rule, just a different time frame, and all the thing that matters in the time frame is just different results. You can't expect 5% on a 15-minute trade versus a 45-minute trade.
Right.
So that's really what it comes down to.
If I could just get consistent 30%, I would be happy.
Yeah. No, I mean, I see you. I see you catch a couple. Go ahead.
Yeah, sometimes I catch the good ones, sometimes I don't.
But now we know why. We got to remove that impulse buying, right? You got to just have that system. Have a system, man.
I'm so focused on trying to figure out where the support resistance is, and it's lying to me. Yeah. Well,
that's why. So that's why, because we throw in the Fibonacci, we have the Elliott waves. These are probability indicators. The probability. This is just saying that based on these, indicators, especially the Fibonacci, this is where there should be good support, and there normally is. It doesn't mean it's going to hold, right? This is where you can set an entry, but this is the best entry if everything goes the way it's supposed to go, right? So the Fibonacci is based on if everything goes the way it's supposed to go, which basically means 5 out of 10 times it'll be right. So to remove that 50% not right moment is why we have the moon indicator. As the moon indicator is going to tell you what is actually happening and when you can believe the Fibonacci is going to be right. Because once that volume on the 10-minute shows support and it breaks above, I'm going to go back to the 10-minute. Once it shows support and breaks above here and actually gets above this line here, right, then we will know that we have actual Fibonacci areas that we can look at and go, okay, this is right. So once it gets above this area here, then we'll be in a situation where we can use the other Fibonacci's to say, okay, the Fibonacci is going to be, the probability that the Fibonacci is right has now actually, became real. But if we don't have the money in the trade, if the volume isn't there in the trade, it doesn't matter what the Fibonacci says. It won't hold because the money isn't in the trade yet. That's why we have the moon indicator to let us know when the Fibonacci has a 50% chance better of being actual fact or being a higher probability. Right? Because if you're just trading off the Fibonacci off support and resistance, there are 3 major support levels to every trade, and if the first one doesn't work, the second one doesn't work, then you're at the third. So in the reality, if you always go with the third, the greediest entry, that's what I was trying to tell you the other day. I was like, if you traded the greediest entry every time, what I was trying to tell you is this, and now that you understand what I was talking about, it'll make more sense. What I was saying was if you traded the greediest entry every single time, right? Yo, trade official. I made 250% trading while shorting Sol. Let's go, bro. I like that. You're in the Discord, aren't you, bro? What's your Discord name, man? So what I was trying to tell you is that this, right? Because you were over trading. So I knew you were using the Fibonacci's. So what I was saying was, if you just went to the lowest support level, right? Because you see that you will have like a support level, right? And it's simple shit. Like, because what I was saying was this, right? Was if we had one support level here, and then there was the next support level, was here. Like, so let's say we had the 236, the set, right, whatever, and then the third level, and those are 3 possible entries. And what I was telling you was this: just go and get the greediest entry and make that your entry. And then from there, instead of a stop loss being, oh no, you're good, bro. You're good. I just was I know you. I was just making sure that's you, man. Because when I'm on TikTok, everyone has different names. That's what I was saying. Yeah. I was just saying that, man. I was asking what your Discord name was because I knew you were in there. I'm just making sure when you guys pop up on TikTok, I know who I'm talking to. But what I was saying is, based off of the greediest, instead of having to do let's say you're doing a 70x leverage, right? Which means that you can pull back 24%, and that would give you a stop loss, right, of 30%. But when you go to the greediest level, right, you could actually take your stop loss and go, okay, you know what, I'm going to move my stop loss to 25%, right, which basically means this. It means that if you're doing a 70x leverage, right, and 70x leverage means if it pulled back halfway, it would be 35. Half of 35 would be 17%, so about a 20% stop loss. So you could do a 20% stop loss instead of a 30 and be somewhere around 27%. So like this. Now, the thing is that now instead of losing 30% on your stop loss if you're wrong, right, you would actually only have a 20% stop loss. Because by using the greediest entry, the odds of it actually going lower than that is dramatically changed than if you got into the very first entry. So if you got into the first support line, the odds of it going down to the second support line is literally 80%. And then then if you put your entry on the second entry, right? I'll move this over here so you guys can see it on TikTok. So if you went to the first support line, the odds of it following to the second support line is about 80 to 90%. Pretty good odds that it will. Then if you put your buy order on the second support line, which what we call the greedy entry, right? The odds of it falling down to the greediest entry are 50%. Right? Still good odds. But if you had only the greediest entry marked as your main entry, the odds of it following to the fourth line, which is the next level of support, is literally 25%. So now 3 out of 4 trades aren't going to go that extra mile, right? So what that means is now not only have you decreased the odds of losing this trade by 75%, you've also increased the odds of making money, because now from your greediest entry, if it just went back to the original support area, where the very first line that most people put their entries on, you're probably 1 or 2% just getting back to the basic mark. You see what I'm saying? So now you're increasing your win, right? You're increasing your ability to make profits by double. So instead of 30 or 60%, you're going to see 90 to 120% per trade. Now that's what I was telling you that because even, right? So think about this mathematically, right? So let's say that you were trying to get into 10 trades, and 5 of those trades you won and 5 you lost. Just normal mathematics, right? And 5 trades that you won an average of 60%. And on 5 trades that you lost 20, right? Or 30. So that means you won 30% times 5, which is 150%. After fees, it's 100%. You doubled your bag, right? Now, if you did the greediest entry, because I was trying to figure out how to solve your over trading and also give you the ability to make more money with less trades. So now, let's say that because of going from the basic entry to the greedy entry and then saying, fuck it, I'm going to the greediest entry, right? Now, even if you did 10 trades in a row, and let's say 5 of them, half of them, didn't even hit, right? And 5 of them hit the greediest trade, right? And now, the greediest trade, instead of it being worth 30 or 60%, it's now worth 100%. Right? That means that out of the 5 trades that you did hit, let's still apply the 50-50 rule. Let's apply that out of those 5 trades that hit, right? Half of those trades did the average of the 100 that it's supposed to do, right? So we'll just say 3 of them. 3 of those 5 trades went for 100%, right? 2 of those trades got stop lossed out for 20. So now you've got 40%, 2020, you've got 40% losses on 2 trades, and you got 100% wins on 3 trades. Right? So when we take that 300% minus 40, that means we made 260%. We'll give 60% for fees. Okay? Now, even though you only got in 5 of the 10 possible trades, you have made 200% by doing the greediest trade strategy, right? This is my other strategy. You did half the trades, but you made 200%. If you would have got in the other trades in the regular system and won 5 and lost 5, that's 100% profits. By doing the greediest entry based on what you were trying to do, you would have made actually double. You see?
Yep.
But that's why when I talk to you guys, what I'm doing is I'm trying to create trading rules and systems that can help a person that is just impulse trading, impulse trades, no systematic. I'm trying to give you some sort of system, right? And allow you to just be, to hit your trades no matter what. So what you saw was that you didn't get in the couple trades that you wanted to get in, but what you didn't realize is that the ones that did pull back and get you in, you would have made double.
Yep. That's for sure. Yeah, for some reason, all them trades are coming about 3 o'clock in the morning.
Yeah. And that is basically, that's like the simplicity of it, man.
Yeah. No, it's all simplified sense now.
Yeah. And that's the beauty of it, man.
I just overthinking it and getting greedy, wanting to trade all I can. But yeah, I like to do the Elliott trades.
Yeah. There's a.
I just like to see when it's. I like to know when it's coming, like you do.
Yeah, I mean that's the beauty of
That's
like.
right.
Yeah, I mean the simplicity of it is really, when the less, it's kind of like, it's like jobs. The less work you do, the more you make.
Yeah, I understand that 100%.
Yeah, and it's the craziest thing in life, but it's just fundamental, like how everything goes. Yeah.
Yep.
So right now the 10-minute is finally breaking the threshold. So now we're seeing that we have a real long position that's actually coming in here on the Solana. So now we can verify that we have a movement here to Solana to a long position. Look at the 15. So if I was watching the 15-minute, right? That's why it's always like the main one. The 15-minute broke here, and then we've had 2 candles beyond that. So we just actually had the third candle, or the second one here. So we would have entered here 2 candles ago, which I think was like 238.50 or something like that. But yeah, so now, yeah, that's it, guys. So I just wanted to watch this trade with you guys live, just to kind of like show you that working the system or where we're at, we can see what we have here. And then you can see that pullback that we got right here on Solana when it hit the top of that. You see how it pulled back there, guys? But we know that on this pullback that we could get into a long on this candle right here, which was sitting at about 230, 238.40, because the volume is actually breaking up for us. So that means that this candle right here should show our breakout right here. Then this is an early floor, so we see that right there. And that's how we can tell. Now, keeping in mind, this is just when you become a better trader and you see how things are coming together, you can basically get yourself into a trade that makes more sense or has more probability of winning. Now for us, we're still waiting for the basics, right? So what we're going to wait for is this. We're going to wait for the 10-minute, right? You see how it's breaking above right now? So now we have the 10-minute breaking above, right, which is what we wanted. Breaking above the 10 threshold, right? So there you go. The 10 threshold is being broke. And now our entry is going to be this, right? Our entry is going to be when it breaks above, which is about to do right now. When it pulls back, right? Whenever it comes back down, when it heads back up, then we will enter Solana long. And I'm going to come back and I'm going to look at this and I'm going to look for it, and I'm going to track this, and then once we have the data, we'll do that 10 times, and then 10 of these trades, and then we'll get the information, and then we'll qualify it as a very simple trade to reproduce. But that's it, guys. So I appreciate you guys joining in on TikTok. Get in there, validate it all. If you guys are interesting, all the information is right here. Just go there, get yourself set up, guys. So Mark MM25. Go check this out. Get yourself in there. The Discord's free to talk, chat, and all that good stuff. Go watch the videos for all the students. It walks you through. But there's a welcome video, guys. There's a welcome video. You know, there's always a welcome video. We throw that in there, and you can go watch the welcome video on the tube, and the tube will get you all the information you need, guys. So good luck. God bless. Have a good day, guys. We'll hop on later and we'll catch up on this the trade and where it is at that point. All right, man. Have a good day, guys. All right, brother.
All right, man. I appreciate you doing the call today for sure.
Absolutely, dude. I wanted to, because that's what I was like trying to figure out, because I've been working on a bunch of different little videos and stuff, and I was trying to like, okay, because we don't want to keep adding stuff. We want to be subtracting stuff. Because I wanted to get it to where it's like there isn't, when there's more, then there's more questions of what, you know, where should I be looking? When we get rid of things, then it's like, okay, I'm only looking here.
Right.
Yeah.
Right. That's why when I first saw that 45-minute, 45-minute move back from like a year ago, I liked it because it was the only thing that was 45-minute buy signal, then the green moon after the buy signal, and that was it.
Yeah. Yeah, and that's because by having that bigger time frame, that allows us to get in there. Then the missing part is the leverage that you want to use when you're at that level, because you're expecting bigger moves, so you can use lower time frames, more like a 30 or 40, and then your stop loss gives you a bigger area to be, you know, to have a pullback happen or something happen, but it's less likely to happen.
Right.
So
It made a lot of sense.
Then that's where that all kind of comes in and combines to itself. All right, brother.
Man, well, I'll let you get on with your family. That's what I'm doing. I'm going home to see my new grandbaby.
Oh, congratulations! How old?
Born on the September 11th.
Oh wow! So you've been on the road. So we got what is this? 8 days.
I'll be home. Yeah, I'll be home in 45 minutes.
Woo! Well, congratulations there. You say your first is that your first grandbaby?
The first grandbaby, boy.
Oh my good. What happened? Congratulations, Grandpa.
Well, that's why I'm hoping to learn to get this so I can help spoil that little fucker a little more.
Yeah, I had my first grandbaby was last November.
Oh well.
Yeah.
That's what I tell him. I'm gonna wait till he's about 1.5, 2 years old when he can talk and listen and change his own diapers. Then I can spoil the shit out of him and teach him real bad habits.
Well, that's awesome, brother. Congratulations, man. And I'm gonna follow up, and I'm gonna make tonight. I'll make a video on what we just covered on taking the 30-minute rule to the 15-minute, and then track the trade that we're just going through here, so we can see the results and kind of walk through it.
Yeah. In the meantime, I'm gonna wait for this 10 minutes to retest the enter.
Yeah. That's what so we're gonna be watching that too, brother.
All right. Well, thank you, sir.
You're welcome, man. Have a good night, bro.